Hi, good morning, good afternoon, and good evening to all participants and all invited speakers. Welcome to International Webinar, Financial Crime, Fraud, and Cybersecurity, hosted by Universitas 11 Maret in collaboration with the Audit Board of the Republic of Indonesia. My name is Joshua Christian, and I will be your moderator for this webinar. So yeah, once again, welcome to this international webinar. Based on the information I received from the committee, I think this is a very huge webinar because for your information, we have more than 5,000 registered participants who wants to join this international webinar. So congratulations for the committee. And we provide 3 channels to all participants to reach and join this international webinar. First, you can join with us through Zoom Cloud meetings. We have shared the link so you can join with us through Zoom Cloud meetings. But if you are not able to join our Zoom Cloud meeting because we have the maximum capacity, you can reach us through Universitas 11 Maret YouTube channel. So make sure that you subscribe Universitas 11 Maret YouTube channel so you can join with us through YouTube. And also it has been broadcasted live in Center for Fintech and Banking, Universitas 11 Maret Instagram Live. So make sure that you follow at uns.fintech center so you can join also through Instagram Live. Yeah, and this webinar we talks about financial crime, fraud, and cybersecurity, the 3 main issues that becomes the concern in this digital era. As we know that digital age automation has developed tremendously, and it brings the effective and efficient way in integrating system, business and transaction process, developing all sectors and industries, and also human life. But on the other side, we also realized that it raised one issue pertaining to the risk of fraud and crime and how to mitigate the risk. So we will discuss about that. We have all invited speakers. They have joined with us. So let me say hi to all of them one by one, okay? Okay, let's start with Dr. Agung Firman Sampurna, CSFA, the Chairman of the Audit Board of the Republic of Indonesia. Hello, Dr. Agung.
Hi, everyone.
How are you? How are you?
Fine, thank you.
Thank you for joining with us. Professor Wiwoho, Director of Universitas 11 Maret. Professor Jamal, how are you?
Hello, good evening, fine.
Thank you. Professor Stuart Madnick from Massachusetts Institute of Technology, USA. Wow. Thank you so much for joining with us, Prof.
Thank you.
Professor John Goodell from University of Akron, USA. I will say hi.
Hi, everyone. Thanks so much for allowing me to join you. It's such a pleasure.
Thank you so much. Dr. Dominic Thomas James from University of Cambridge, UK and Yale University Global Justice Program, USA. Hi, Dr. Dominic.
Good evening to everyone. Excellent to be with you
It's
today.
nice to see you. Thank you. Professor Marianne Junger from University of Twente, Netherlands. Hi, Prof. Junger.
Yes.
Is it correct? Professor Junger, right?
Yes.
Okay. Thank you so much for joining with us. Dr. David Chaikin from University of Sydney, Australia. Hi, Dr. David.
Hi, and thank you very much for inviting me to this very interesting seminar. It really says something that you're organizing it in more than 3 time zones. It's quite an achievement.
Yes. Thank you so much, Dr. David, for joining with us. Dr. Mohamad Iqbal Arruzi from the Audit Board of the Republic of Indonesia. Halo.
Hai, halo, Mr.
Okay, so I can say in bahasa. Apa kabar, Pak?
Baik, alhamdulillah. Terima kasih.
Okay, it's nice to see you. And Dr. Taufiq Arifin from Universitas 11 Maret.
Hi, thank you for this opportunity, Joshua.
Okay, thank you, my lecturer. Thank you for joining this webinar.
Yeah.
There is one also, Dr. Richard Alexander, but he will join with us after 9 p.m. because he still have any agenda. So yeah, thank you so much for all speakers. It's been our honor to have all of you here to share your knowledge, to share your insight pertaining to these topics. So moving to the next agenda, I would like to invite the Rector of Universitas 11 Maret, Professor Jamal Wiwoho, to give the opening remarks for this webinar.
Okay. Assalamualaikum warahmatullahi wabarakatuh. Good evening, Excellencies Dr. Agung Firman Sampurna, Chairman of the Supreme Audit Board of the Republik Indonesia, BPK. Selamat malam, Pak Agung Firman Sampurna.
Selamat malam, Pak Rektor.
Selamat malam. Terima kasih. Respectable all speaker in this webinar, Professor Stuart Madnick from MIT, USA. Good morning.
Good morning. Thank you.
Good morning.
Thank you.
Professor John Goodell from University of Akron, United States of America. Good morning. Professor Marianne Junger from University of Twente, Netherlands. Good morning.
Good morning.
Thank you. Dr. Dominic Thomas James, University UK. Good afternoon.
Good afternoon to you. Excellent to see you.
Oh, thank you. Dr. Richard Alexander from SOAS University of London, UK. Good afternoon. Dr. David Chaikin from University of Sydney, Australia. Dr. Baharom Abdul Hamid from Malaysia. Selamat malam.
Selamat malam, Pak.
Thank you.
Thank you.
Dr. Mohamad Iqbal Arruzi from BPK RI. Selamat malam, Pak Iqbal.
Selamat malam, Bapak. Terima kasih.
Thank you for your coming. And Dr. Taufiq Arifin from 11 Maret University. Sugeng dalu, Pak Arifin.
Sugeng dalu, Prof. Jamal.
Matur nuwun rawuhnya.
Ji, sami-sami.
First of all, on behalf of 11 Maret University, it is great pleasure for us to welcome you to the big event, the international webinar on financial crime, fraud, and cyber security. As we have witnessed, technology has rapidly impacted in many aspects, including in financial service. However, what the digitalization and automation of financial system, the threat of financial crime and fraud, including money laundering, have become more electronically sophisticated. Therefore, this webinar, in which more than 5,000 participants registered and dedicated to providing a forum to discuss the financial crime and fraud in the digitization and how to prevent and detect it. In this question, we fortunately have Dr. Agung Firman Sampurna, the Chairman of Supreme Audit Board of the Republic of Indonesia, as the keynote speaker and many well-known international speaker. Our university has committed to contribute in the sustainable development, not only at the national level, but also in the regional and international environment as we are fully aware that in today's globalized world, contribution of university should be promoted to a wider spectrum. Finally, let me reiterate that we strongly expect that this forum will be beneficial from you all and gain. We thank you very much for participating in the international webinar. Good evening. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Thank you, Professor Jamal, and I believe this will be beneficial to all of us. And before we proceed to the next agenda, I would like to say hi to Dr. Baharom. I have not said hi to you, Dr. Baharom. Hi, Dr. Baharom.
Yeah, Assalamualaikum, Yoshia. Hi.
Thank you so much for joining with us from Malaysia, our neighbor. Thank you. Yeah, moving to the next agenda, I would like to invite the chairman of the Audit Board of the Republic of Indonesia, who will deliver the keynote speech for this webinar, to Dr. Agung Firman Sampurna, CSFA. The time is yours.
Yeah, honestly, I never thought the participant of this activity would be so enthusiastic. Thank you, moderator. The respectable Rector of 11 Maret University, Professor Dr. Jamal Wiwoho. I would like to greet all the panelists across the globe. Professor Stuart Madnick from the Massachusetts Institute of Technology, USA. Professor Goodell from the University of Akron, USA. Dr. Dominic Thomas James from University of Cambridge, United Kingdom, and fellow at the Yale University, USA. Professor Marianne Junger from University of Twente, Netherlands. Dr. Baharom Abdul Hamid from International Center for Education in Islamic Finance, Malaysia. Dr. Chaikin from University of Sydney Business School, Australia. Dr. Richard Alexander from University of London School of Oriental and African Studies. And of course, Dr. Mohamad Iqbal Arruzi from the Audit Board of the Republic of Indonesia, and Taufiq Arifin from 11 Maret University of Indonesia. All lecturers, students, and webinar participants all over the places. Let me start by saying Assalamualaikum warahmatullahi wabarakatuh. Peace be upon you all. Ladies and gentlemen, in the past 20 years, financial crime in the banking and capital market and insurance sector has increased in terms of intensity, quantity, and quality. It does happen not only in Indonesia, but also in other parts of the world. In Indonesia, financial crime began to draw public attention when the Bank of Indonesia Liquidity Assistance, popularly known as BLBI case, and Bank Bali scandal emerged. Bank Bali at the time committed fake transfer of account receivable or chassis. The scandal was revealed through an investigative audit process that was quite complicated because it involved the layering process in flowing funds. Such a process was successfully disclosed by way of using information technology so that all patterns contained in thousands of financial transactions were clearly seen through a sunburst diagram. After the Bank Bali scandal, so many different kinds of banking crime have emerged, including one related to the provisions of the short-term funding facilities FPJP to Century Bank. The provisions of FPJP apparently also had a systemic impact to result in distributions of temporary equity participations by deposit insurance corporations, or LPS. Similarly, in early 2020, this year, there was a financial crime that has really drew public attention, the scandals of Jiwasraya Insurance Company and Bumiputra. The Jiwasraya Insurance case was the first time scandal taking place in the capital market and in the field of insurance. Both the quality and quantity of this case are increasing. The state losses and the impact on other institutions were huge, not only companies related to Jiwasraya that were affected, but also the Financial Service Authority. This such case have proven empirically that disclosure requires unusual examination procedures through an investigative audit assignment. Considering that the chronology of this case illustrates an increased terms of intensity, quantity, and quality, strengthening the investigation audit and the role of forensic auditor is very important. Therefore, I am enthusiastic to welcome the initiative and the urgency of international webinar on financial crime, fraud, and cybersecurity organized by 11 Maret University that also involves some experts from different continents. This topic is very current and relevant for all of us in the midst of the COVID-19 pandemic crisis that hit Indonesia and the rest of the world with its impact on stability of country financial sector and financial systems. Reflecting on past experience, the economic and financial crisis always lead various legal issues in the future, and at the same time, so the role of investigative audit is of paramount importance in uncovering these problems. This international webinar activity is at the same time our collective effort as a form of an early warning system for perpetrators of fraud and financial crimes, and for all of us to improve the quality of accountants and forensic auditors in preventing and detecting fraud and financial crime that is increasingly more complex and varied in line with the advancement of cyber and digital technology. Ladies and gentlemen, in accordance with the Act number 15 of 2004 of the Audit of Management and Responsibility of State Finance and the Act of number 15 of 2006 on the Audit Board of the Republic of Indonesia, or popularly known nationwide as BPK, conduct three types of audit, namely financial audit, performance audit, and the audit with specific purposes. Investigative examinations is one form of audit with specific purposes. In some literatures, investigative audit is interpreted as an audit initiative that is closely related to the alleged fraud, both fraud in company operation and fraud in company financial system, financial statement. Investigative audit is a form of audit where the end result is conclusion whether a fraud actually occurred or not. The investigative activity is one of the efforts to prove the occurrence of crime, as the end result is the conclusion of alleged fraud. An investigative audit can only begin if the predication is strongly well-formed. Predication is storyboard on all events that directly or indirectly lead to conclusion that a fraud has really occurred or is happening or will occur, as mentioned in Tuana Kota 2016. This predication is very helpful for the auditor to design the 5 W and H questions and other relevant questions to reach the conclusions of the investigative audit result. The result of this investigative audit become a legal evidence that can be generally proceeded to court using the applicable legal provisions. It is a such close distance of the investigative process to the legal verification process that an investigative audit involves not only fraud testing or fraud examiners, but also some forensic expertise, especially forensic audit and digital forensic. This forensic expertise is a must in every single investigative audit as a tool to anticipate the possibility of emerging dispute or litigations. Referring to statement on standard of forensic services number 1 issued by AICPA, or American Institute of certified public accountants, forensic is defined as fit for use in court hearing and public debate. Through this forensic process, an investigative audit can be concluded whether a fraud has actually occurred or is happening or just will occur. By the conclusions of alleged fraud, the investigative audit has a clear position in detections and preventions of fraud. In the investigation audit process, an evidence is very indispensable to prove the occurrence of a fraud. In the last 10 years, in the era of so-called as the Industrial Revolution 4.0, there has been a shift in the form of evidence. In 2001, the United States of America issued the USA Patriot Act, which allowed federal agents to obtain records of company transactions for the sake of state security. The law also facilitated information sharing initiative among government institutions so that it built a comprehensive information network or a better connected to the dot, as mentioned in Department of Justice 2001. In Indonesia, this development was marked by the issuance of the Act number 11 of 2008 on the information in electronic transactions, within which electronic information and or electronic document can become one of the legal proofs of law. Thus, today it is not only statement or witnesses, experts, defendants, or letters and instructions that can be legal evidence as stated in the Code of Criminal Procedures, but also electronic and digital evidence as stated in the 2008 Electronic Information and Transaction Act. The advancements of information technology not only encourage the enrichment of evidence and legal evidence, but also triggers the development of audit techniques to detect and prevent fraud. Current investigative audit techniques are not enough just to test documents, physical instructions, or witness statements. Investigative audit must be able to utilize information technology to improve the ability to detect and prevent fraud. The development of information technology in investigative audit at this time can be directed to strengthen two processes, which are the main tools related to the analysis of digital evidence and electronic evidence, namely the digital forensic and data analytics processes. Ladies and gentlemen, the rapid technology of information technology has a positive impact on the increasing use of technology in daily activities. Not only to increase the value of company, technology is also used by fraudsters to facilitate their fraudulent activity. The consequences of crime of using technology is the increasing amount of digital evidence that must be tested and researched by law enforcement agencies around the world, including investigative auditors. Ultimately, the need for the adoption of digital forensic practices will greatly increase in the future. As the only institution with the authority to conduct audit on the management and responsibility of state finance, the Board of Audit of Republic Indonesia, or BPK, undoubtedly needs the most updated digital forensic facilities. BPK is not super body institution though. However, to implement the entire digital forensic process, BPK always collaborates with all law enforcement agencies, such as the police, Attorney General Office, and Corruption Eradication Commission. The implementation of digital forensic is always conducted in every investigation audit assignment. This is one of BPK responsibility, particularly in conducting audit with specific purpose. To attain the qualified result of digital forensic, BPK has now owned digital forensic laboratory facilities. The existence of these facilities is able to reduce the level of dependence of the investigation team on the third parties. BPK Digital Forensic Laboratory has been equipped with several devices and hardware for conducting interrogations of electronic devices. Electronic devices that can be analyzed for data are not only storage media available on computer laptop that can also analyze data stored on a mobile phone. In 5 or 10 years to come, the challenge in applying digital forensics are increasing in both quantity and quality. In the early 2000s, analyzing data and information stored on computer hard disks was common in investigative audit. In the early 2010s, the compilations of technology owned by telephone device had capabilities similar to computers. Digital forensic activities began to more widely apply to storage media connected to mobile phones. In the early 2020s, along with the maturity level of cloud computing service providers, more and more companies are storing their data on these services. Coupled with the increasingly widespread use of Internet of Things, or IoT, for face data transmission from device to data centers, the challenge of digital forensic in the future will be increasingly complex in cloud services. User will not know the physical locations of the data storage media. This condition encourages the digital forensic specialists to continually update their expertise. From some experience in conducting digital forensic, there is concept that must be obeyed by investigator when interrogating electronic device, including the storage media available therein. The concept is called chain of custody. Chain of custody is a factor that determines the work of digital forensic feasible enough to be given in court. Chain of custody is a set of integrated and complete information about time, locations, and personnel for the evaluations of digital evidence moving from acquisition of computing devices, storage media acquisition, data collection analysis, up to the result report. The importance of chains of custody in the process of digital forensic can be seen in a number of cases in court. In 1990, for example, in the case of O.J. Simpson, there was a negligence in securing the entirety of chains of custody of evidence found at the scene. As a result, the prosecutor were unable to present reliable evidence. The incomplete chains of custody convinced the judge to decide the defendant innocence. In Indonesia, in 2016, there was a case that caught public attention, such as Vietnam coffee case. Jessica Kumala Wongso was charged to be responsible for the death of Wayan Mirna Salihin. In this case, the public prosecutor invited a digital forensic expert. From the trial record, which were all broadcast live to the public through YouTube channels, there is one testimony showing an incomplete chain of custody in managing evidence of CCTV recording taken from the scene. The two examples above are the cases of general crime. However, the same thing is also applicable for digital forensic use in any fraud case and other financial crimes. In addition to the chain of custody, there are other referenced frequent use by investigators in implementing digital forensic, such as 4 principles of handling digital evidence issued by Association of Chief Police Officers, or ACPO, as I mentioned in ACPO 2012. The 4 principles are: first, there must be no activity by law enforcement agencies, law enforcement officials, or assignees that make change to the data to be used in court. Second, when a situation requires a personnel to access information containing digital evidence, that person must have sufficient competence and have the ability to explain matters relating to his or her actions. Third, all activity that are applied to the digital evidence must be recorded so that the third-party re-performance process can be carried out and provide the same result. And fourth, the party carrying out this investigation has full responsibility for ensuring that all actions are in accordance with applicable regulations and these principles. BPK practice of digital forensic result in evidentiary process in court is still minimal. The result of digital forensic process in BPK are still in exploratory analytic areas. This suggests a direction for inspection procedures to lead to confirmatory. For example, BPK has software to support digital forensic activity in the form of NCEIF or NUICs, which are used to check digital evidence stored in storage media. Both software can produce some information and also the patterns of series of electronic communication stored in the storage media through data exploratory analysis. This information is useful for other investigators as material for conducting interviews or exploring the further information obtained from the result of the digital forensic in confirmatory analysis procedure. Another important thing of implementing digital forensic is issues of objectivity and integrity. Both are uneasily influenced by other information irrelevant to predetermined predications. For example, if an investigative audit is intended to prove that there is a crime in financial sector and must carry out the digital forensic process, then each party carrying out the process must prioritize the matter expected from the assignment. If within the activity there is some other information which has nothing to do with predetermined predications, such finding pornographic videos or finding illegal software when checking hard disks, then the information as such must be ignored and should not be disclosed, as I mentioned in Kafrestak 2020. Ladies and gentlemen, the directions of developing information technology to strengthen the investigative audit function in detecting and preventing the financial crime is toward the enhancement of data analytic superstructures and infrastructures. Some practitioners believe that data analytics is just the same as computer-aided audit technique or CAATS. But AICPA distinguishes the two processes. Data analytic involves a broader process than CAATS. The latter is designed as a part of audit procedures, while the former is done to generate some information for the basic of the preparation of inspection procedures, as I mentioned in AICPA 2017. The concept of data analytics is getting popular in line with the development of big data. The existence of big data has then created some opportunity to use the big data. Therefore, the use of traditional software such as spreadsheet or generalized audit software become irrelevant because of the large amount and variety of data. AICPA defines data analytics as a science in uncovering and analyzing patterns stored in a set of data, identifying irregularities, and exploring other information that may be useful and relevant to purpose of inspection through process of collecting, cleaning, analyzing, modeling, visualizing data, both in the planning stage as well as the inspection. The main purpose of data analytics is to improve the quality of checks in response to business environment that has broadly used information technology. The ability of data analytics to reveal or identify a pattern contained in diverse data sets is very helpful for investigative audit activities in revealing fraud or other financial crimes that have a hidden nature as I mentioned in Tuan Kota 2016. The process of data analytics is mostly implemented in two stages, exploratory and confirmative. In the exploratory stage, data analytics functions to obtain patterns and attributes contained in a set of data. After going through a series of validation and accuracy process, the data will be delivered to other investigators to go further into confirmation stage. At this stage, the information is applied to the inspection procedures. Several studies have concluded that there are three analytical models that can be generated from the data analytic process, primarily in the examination, as I mentioned in INCEIF 2019. The three models are descriptive analytics, diagnostic analytics, and predictive analytics. By descriptive analytics, auditors are able to present a general picture of data set. An example of using descriptive analytics in an audit is when the auditor can find expenditure patterns of government capital in every fourth quarter. Usually, the amount of capital expenditure sharply rises up. By descriptive analytics too, the auditor can create a narrative profile of the audit entity using the data. By diagnostic analytics, the auditor can identify the existence of anomalies in a set of data. Then he or she conduct an analysis of the relationship between one data with another data and be able to see a pattern in the data set. An example of using diagnostic analytics in auditing is when the auditor is able to identify suspected bid rigging during a procurement process of goods and services. When a pattern of vendor participation is seen in government or procurement actions. The following are examples of data visualization that are often found as a result of descriptive or diagnostic analytics. Predictive analytics over the auditor to be able to predict what will happen in the future based on all data he or she has. For example, having the ability to conduct predictive analytics, an auditor can predict what procedures to perform with. In addition, he or she can also prevent and anticipate the fraud in financial statements by way of calculating projected misstatement in determining whether an audit sample can be accepted or should be rejected, as I mentioned, International Accounting Standard Board 2009. If the predictive analytics is continuously developed, it will help institutions in creating machine learning infrastructures. This continuous development will then make the concept of robotic process automation, or RPA, a reliable tool for any institution to rely on, especially for those whose fields cover big data and highly dependent on availability of the data, as I mentioned in Moffitt et al. 2018. As an institution that routinely conduct audit of financial report at the central and regional government level, BPK has significant opportunity to develop information technology up to that point. That following figures is the process that occurred in data analytics referring to INCEIF data analytics guidelines, as I mentioned in INCEIF 2019. The investigative audit can be done together with law enforcement agencies. Thus, it is possible to implement this data analytics with various data sources. Data analytics will make investigative audit more efficient and the quality of audit results will be well maintained. Ladies and gentlemen, for the development of information technology to provide optimal benefit for investigative audit in an effort to detect and prevent financial crimes, digital forensic and data analytics practice must be synergized, and each does not stand alone. The result of digital forensic process can be presented as input to the data analytic process. With this simple scenario, the existence of data analytics will enrich the procedures of investigative audit with relevant information, but without being monitored through the digital forensic process. The synergized capacity of digital forensic and data analytics is a strong foundation to form what is called corporate intelligence. Corporate intelligence is defined as the ability of an institution to analyze data obtained due to its authority or obtained from public domain for decision-making process, for decision-making purpose. Although some practitioners assume that corporate intelligence is the same as business intelligence, there are differences between the two. The scope of data used to build corporate intelligence is much broader than that used to build business intelligence, as mentioned in Scalab et al. 2011. Corporate intelligence uses a lot of data that is spread in public domain. The availability of corporate intelligence in financial institutions will certainly increase the role of investigative audit in it to not only detect financial crime, but also prevent them. Being aware of the importance of synergies between the two areas in the development of information technology to strengthen investigative audit, BPK has taken the initiative to build big data analytic infrastructures. The initiative has been listed as one of the strategic initiatives in the BPK 2020-2024 strategic plan supporting the vision of BPK towards become the trusted audit institution that play an active role in building quality and beneficial state financial management to achieve the country goals. Before ending my keynote speech, I would like to remind you that challenge and risk in digital cyber world will be increasing in the years to come. According to the Global Risk Report 2020, published by the World Economic Forum, global risk, technological risks are included in top 10 global risks that need attention. Specifically, the technology risk is the form of data fraud, cyber attacks, and infrastructure breakdown. Finally, congratulations on joining the international webinar. Hopefully this activity can run smoothly and provide optimal results in accordance with the objective. That is for various information about latest development in field of financial crime, fraud, and cybersecurity in the digital world era. I do hope that this international webinar can also produce a series of brainstorming suggestions as a form of joint effort to prevent and detect various financial crimes and fraud through increased cybersecurity and the role of forensic accountants and auditors. Thus, we all take an active role in each other across country in building world with better governance. Thank you for your kind attention. Billahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Dr. Agung Firman Sampurna, for the keynote speech. Yeah, he stressed on the role of investigator in the future as the important role in terms of the development of the technology and information. And of course, the audit board needs to improve and adjust with the development of information and technology, like what the Audit Board of Republic of Indonesia has done, the Digital Forensic Laboratorium. So congratulations to the Audit Board of the Republic of Indonesia for the achievement and transformation. So thank you so much, Dr. Agung Firman Sampurna, the Chairman of the Audit Board of the Republic of Indonesia. So let's move to the next agenda. We arrive in the plenary session for this webinar. We have 9 invited speakers that has joined with us to share their insights and perspective about the topic of this international webinar. But before we start to the first speaker, I would like to remind to all participants that you can participate in this international webinar. If you have questions, do not hesitate to let us know. You can submit your questions. If you are connected with us through Zoom cloud meetings, you can submit your questions with the format name, your institutions, to whom your question is addressed to, and your questions. You can submit it through Zoom chat box. And if you are connected with us through YouTube channel, Universitas 11 Maret YouTube channel, you can submit your question with the same format through live chat. And the same with all participants who connect with us through Instagram Live of Center for Fintech and Banking, Universitas 11 Maret. Our committee will select the questions, and I will read those questions in the Q&A session after all presenters present the materials. Okay, the information for you to submit the question will appear in your display, so you can follow that rule. Thank you so much. So now we are going to our first speaker. I would like to introduce our first speaker. He is a professor of information technology at Massachusetts Institute of Technology, USA, and also the founding director of cybersecurity at MIT Sloan. He holds a PhD in computer science from MIT and has been an MIT faculty member since, 1972. Wow. Besides cybersecurity, his other research interests include big data, semantic connectivity, database technology, and software project. So without further ado, hello, Professor Stuart Madnick.
Welcome from Cambridge, Massachusetts, halfway around the other side of the world. It's great to meet so many of you today. Unfortunately, it's only virtually, but I'd like to talk to you today about what I say every manager should know about cybersecurity, and also relate it back to the theme of financial crime and fraud. Get this slide to advance. There we go. So I assume that there's probably a wide range of backgrounds of the various people participating. So I want to say a few things that many of you may know, but many of you may not know, so that we're all on the same level. So I said managers. So the question is, why should managers care about cybersecurity? Let me give you just one example. I'm not sure how many of you have heard of the WannaCry cyber attack that took place about 2 years ago. It was an example of ransomware. Now, for those who are not familiar with ransomware, it's actually somewhat different than the typical cyber attack where information is stolen. In this case, the information is not stolen off your computer. What happens is the information is scrambled. It's cryptographically encoded. So the information is still on your computer. You just can't make use of it until you pay a reward, a ransom, if you will, in which case then you're given the code to release it. Now, I was in my office this day when the WannaCry attack took place, and one of my students rushed in. It turns out he had previously worked for Telefonica, a major telephone company in Spain. And he was sent this screenshot that you see on the left-hand side. Unfortunately, I don't read Spanish, but he translated it as urgent, turn off your laptop immediately. It turns out that 80% of all of the computers at Telefonica were attacked by the ransomware and were locked up. Basically, they could not conduct any business, and all of the employees were then sent home. That is an impact that probably will have an impact on most managers when you have to shut your company down. This particular attack hit 300,000 computers in over 100 countries in a matter of hours. So there are these examples of attacks that have a major impact on your organization. There are many others we can talk about if we had more time. One that might be relevant to this group was the attack that took place via the SWIFT network that ended up stealing approximately $81 million, and in fact was an effort that could have, if successful, have stolen over $1 billion US. And although we're going to be focusing on financial issues, it's not just money that's at stake. There can be attacks that affect your life or your property, such as the Turkish pipeline explosion, the German steel mill attack, the shutdown of the Ukrainian power grid, and many attacks aimed at the United States power grid. Now, this is not news to many of you. And the question you might ask yourself, with all of this activity going on, obviously the universities, the government, the private sector must be doing things to produce better software and better hardware. So I've got some good news. As this chart kind of indicates, the good guys are indeed getting better. Better technologies, better methods. Unfortunately, the bad news is that the bad guys are getting badder even faster. And in fact, this gap is growing. As this headline indicated, hackers are getting better at offense and companies are not getting better at defense. So you might be curious, well, how can that be true? There are many reasons, but it turns out in many ways, the bad guys do a much better job of information sharing than the good guys do, which is an important issue we all have to address. But not only that, there is the assumption that you have to be a super techie hacker in order to do these kinds of events, and that's no longer true. Most of, I call it the weapons for a cyber attack, are readily available for sale on the dark web. In fact, many of the weapons used in the WannaCry attack were in fact software that had been developed at great expense by the United States National Science Authority that had then been stolen and was then available for resale at a fraction of the cost on the dark web. So in many ways, you can buy everything you need to know in order to do a cyber attack. Now, for many of you, or many people I talk to in the public, have heard of cyber attacks and cybersecurity, and the immediate assumption is, well, that's a very technical issue, and shouldn't that be something addressed by the IT folks? Well, of course, there's a lot of work, as I said, going on in industry and in research, focusing on ways to improve the hardware and software. And that's all very helpful. But in fact, it turns out that a majority of cyber attacks, estimates range from 70 to 80%, some people estimate 90%, are aided or abetted by insiders, usually unintentionally. And that's why I say it's so important to address the managerial, organizational, and strategic aspects of cybersecurity, which are the role of us managers. And that's why I think this is very important for all of us. Now, let me give you an example of getting closer to the issues regarding fraud and such that were mentioned at the beginning. There was a great report that came out by the Gardner Group. They're a consulting firm, and had the title, Prevention is Futile. I don't know how many of you may be familiar with a science fiction television show called Star Trek. On that show, there are the evil forces known as the Borg, and whenever they're going to attack, they always say, resistance is futile. And they kind of picked up on that theme here. The argument is you can put all kinds of hardware and software techniques. I often say you can put a stronger lock on your door, but if you still leave the key under the mat, you're not necessarily any more secure. And the good example is phishing attacks. Now, many of you may have heard about them. Possibly many of you have been exposed to them. The early phishing attacks, I call them mass spam emails, typically say things like, hello, I have inherited $100 million. I want to share my good fortune with you. I want to give you $1 million. All you have to do is send me the following information. These sound kind of ridiculous, but it turns out 1 to 3% of people actually do fall for them. And of course, there are better phishing attacks. The most common one nowadays is an email you may be getting what appears to be the IT group in your company that will say things like, we believe we're under a cyber attack. We need your help. Please do the following things. There's usually a very nice looking message, has the logo of your company on it. And these attacks can often get anywhere from 10 to 18%. But the thing I want to spend a few minutes on are spear phishing. I'm not sure if that's a term that all of you have heard of, but these are very successful. The idea behind spear phishing is a very targeted email. The classic example would be an email message apparently sent from the chief executive officer of your company to the chief financial officer of your company, typically saying something like this: "Hey, Fred, we're engaged in acquiring a company in Indonesia. It's a big deal, but you need to keep it very secret. But we've retained a law firm, and we need to send them $100,000 retainer immediately, because this is a very active transaction, and others may try to beat us to it. So please be sure to send out that money immediately today. Oh, and by the way, I can't be reached today. I'm going to be attending a webinar about cybersecurity in Indonesia today." Now, you may be a little cautious. You call your executive's office, talk to his assistant, who said, "I'm sorry, you can't get him today. He, in fact, is talking or involved in a webinar in Indonesia today." So what do? This is a multi-million-dollar deal. Your boss has told you to send money. And he obviously started his message off very friendly, say, "By the way, Fred, it was great to get together with your wife for dinner last week. Let's do that again." So it looks like a very convincing email. What do? In most cases, 70% of the time, people send it. There have been examples of hitting the United States White House, Barclays Bank, organizations around the world at the top levels. These are very successful types of frauds, if you will. Now, I've gone through this kind of quickly, and many of these things may be things you're familiar with. There are many others we have that you might be interested in. But the obvious question is, of course, what can be done about this? So I'm going to talk to you a little bit briefly about what we're doing in my organization at MIT. We formed a group called the Interdisciplinary Consortium for Improving Critical Infrastructure Cybersecurity. That is a mouthful. And we've recently renamed it Cybersecurity at MIT Sloan. A little bit easier to say, has the initials CAMS. And I welcome you to visit our website to learn more about it. Currently, we have about 25 projects going on. As I mentioned, we're focused on the managerial, organizational, and strategic aspects of cybersecurity. I wanted to just take time to just briefly mention one of those projects. It actually does relate a little bit to the issue of digital forensics we just heard about a minute ago. The idea behind this project we called cyber safety. The idea was there's been a significant amount of research done at many places, including at my university, to try to reduce industrial accidents and improve safety. And our question was, to what extent can we use this research developed to improve safety to improve cybersecurity? And we call this effort cyber safety. And we've used it to analyze many attacks like Stuxnet and Capital One and Equifax, as well as to prevent various kinds of attacks going on into the future. So let me tell you a little bit what cyber safety is all about, how it works. There are three key concepts. The first concept is that it works top down. That is, focuses on what it is that you need to protect or prevent. I use an analogy. Possibly at my university, there may be 10,000 doors. And it would be good if at night all 10,000 doors were locked. But not all 10,000 doors are equally important. If we can identify which ones are most important and focus our energy on those, we're likely to be improving the overall security of our organization. It's amazing how many organizations haven't thought about what is most important. The second concept is based upon using a process model. That is, we say that everything that goes on in your organization, whether it's mechanical, electronic, computerized, or human, is a process. And every process has some kind of manager, or I call a controller, that makes sure that process is doing its job correctly. So that's a notion of having a controller for every process. But the controller itself is a process. And so, in fact, there is a controller for that controller, et cetera, et cetera. And that leads up to a hierarchy of controls in your organization. What we say is that a cyber attack or accidents take place because of a breakdown in the way in which the control systems operate. I'm going to quickly go through a quick example. This example was called the TJX data breach. TJX may not be familiar to you. It's a parent company of a major retail chain operating in the United States, Canada, and some parts of Europe through companies known as TJ Maxx, Marshalls, Home Goods, and such. This goes back over 10 years ago, but the story is very relevant. Number one, because at the time it was the biggest attack of its kind. 45 million credit card numbers were stolen. But what we like about this attack is that it went to court and there was a tremendous amount of data revealed. One of the big challenges you have with digital forensics in general is often companies are reluctant to reveal a lot of what actually is going on. I often say, what you often see is I call the endpoint. You hear that the back door was unlocked and that's how the burglars got in, but nobody realizes that all the windows were open and the key was under the front mat. So you really want to dig deeper into what's going on in the organization that made this event happen. Now, this diagram is probably much too complex to read or see, and I don't have time to go through in depth, but this is the hierarchical control structure that we developed for that TJX attack. We've done similar ones for Capital One, for Equifax, more recent attacks. I just want to jump way up here to the upper left. You see the state legislature. What in the world does a state legislature have to do with a cyber attack? Well, it turns out the rules and regulations for compliance that are put out place by the government have an important role. And in many cases, they help cybersecurity. And in our studies, they have often hindered cybersecurity. So that's a whole major issue. But I want to focus our attention more at the lower level here at the payment card processing system. That is a controller, if you will, that interacts with other controllers both below it and above it. What we do for each of these controllers, we ask 4 questions. We first say, what is it that controller should be making sure that happens? We want to have the payment card data to be encrypted. There is a thing called the PCI DSS, Payment Card Industry Data Security Standard, that all credit card processing should abide by. And also you want to make sure that the systems are well tested and that you make sure you're only holding on to data you need to hold on to. As it turned out in this particular case, TJX was not in compliance at that time with PCI DSS. And there were a number of decisions. These are managerial decisions in principle. Number one was to not fully adopt PCI DSS. I'll come back to that in a minute. Number two, they retained much more data than they needed, and they kept that data much longer than needed. If you don't have the data, it can't be stolen. Why have data that you don't need? Sorry. Okay. Then number 3 and 4, you need to make sure the data is encrypted. So if someone steals the data, they can't make use of it. And finally, it turns out there was interaction between TJX and their credit card processing companies who had raised concerns, but none of them had made a big deal of it. As a result, the corporation was basically asleep at the wheel because not having seen any problems, they assumed everything was fine. This is the kind of analysis we do at each one of the controllers. We say, what should it be doing, and is it in fact doing what it should be doing? Now, Professor Levson at my university is the originator of the safety method we built on. And she has a statement that most major accidents, or in this case, cyber events, are a result of a migration of a system to a higher risk state, often unintentionally. In other words, as we go to something new we haven't done before, we're introducing ourselves into a risky situation. And almost everything involving IT involves new technologies and new. So here are 3 events. Number 1, at the time, TJX was one of the first organizations to adopt Wi-Fi, and they were unaware of all the risks. We've seen this most recently. I'm not sure if you've experienced it. Many organizations have recently adopted Zoom, as we have here. And as you've read the reports, there's all kinds of ways early adopters of Zoom were unaware that they could be penetrated. So whenever new technology is introduced, it almost always opens up new risk. There's a thing we call recall bias, and that is TJX had never suffered a cyber attack in the past, and they naively assume, well, we haven't suffered an attack in the past, we most likely will not suffer an attack in the future. It sounds ridiculous, but I would say the majority of organizations we talk to have that way of thinking. And finally, we call this the confirmation trap, and we've seen this in many of our studies. As I said, much of documents reveal as part of the criminal actions involved here. This is a screenshot of an email that was sent from the Chief Information Officer to his staff. In summary, what it says is, we realize that we are not PCI DSS compliant, and we probably should be. But we're getting into the busy season for our business. This has been a tough year financially. Don't you all in my staff agree with me that it would be safe for us to wait until next year? Okay. And of course, it's not surprising, all of his staff agreed with him. We've seen the exact same, not the same words, but the exact same phenomenon in the Equifax and Capital One and other break-ins that have taken place. The idea being is often you realize you're at risk, you postpone dealing with that risk, and you run into risk. Finally, what we did is in our analysis, there had been studies done by the Federal Trade Commission and other organizations. This cyber safety analysis allowed us to discover vulnerabilities and things to address that nobody else had unveiled before. So we believe it's a very important method to be used to aiding in the understanding, either be after an attack to realize what is wrong and what has to be fixed in the future, or before attacks to realize what are your vulnerabilities and what needs to be done about them. So I want to end by giving you a following bit of news. In many ways, the worst is yet to come. There are whole new technologies ranging from blockchain to IoT that we've studied that are wonderful technologies, but are opening up whole new areas of penetrations. But it's important for all of us to understand the landscape, because what's at risk is wealth, political stability, property, your physical well-being. If you don't understand these risks exist, you won't be able to take action. Management, all of you have to take the lead in helping our organizations be more secure. Glad to communicate with you afterward at this email address or visit our website. I want to thank you all and look forward to answering some of your questions in the Q&A section. Thank you all for participating.
Introducing one of the MIT's project called Cyber Safety Hierarchical Process Model. And I want to highlight what you put in your slides. The good guys are getting better, the bad guys are getting better faster. Wow, that's cool. I believe it can be a reason why management needs to care about cybersecurity, understand the threat landscape, and address it with the strategy of cybersecurity. So thank you, Professor Madnick, for your presentation. So now we move to our second speaker. We'll meet our second speaker. He is a professor in the Department of Finance at the University of Akron, USA. His research interests focus particularly on the impact of financial system on national culture and institution. He completed his PhD from Kent State University, and now he is active in publishing his research in some numerous journals and media outlets. He is currently editor-in-chief of Elsevier's research in international business and finance, as well as an associate editor for a number of leading finance journals. So without further ado, hi, Professor John Goodell. The time is yours, Prof.
And hopefully we can go full screen on the slides. I'm not sure why it's not responding, but I wanted to talk with you today about the ethics of machine learning. And I seem to have a little trouble advancing my slides here for a second. Here we are. Thank you. So special thanks to everybody, the Audit Board of the Republic of Indonesia, and of course UNS Solo, and my great friend Irwan, and everyone, guest participants. It's such a pleasure to speak with you today. I'll try and move a little bit quickly. I realize time is important. As I think everybody knows here, financial services, insurance firms, and everything else are growing in their use of artificial intelligence. I think at least half of so many industries now, activities are involving artificial intelligence, and artificial intelligence is supported by well-known technologies such as machine learning, which is the focus of some activity that our team's been doing recently. I'm not really here to talk about the specifics of what we're doing and how we're doing it, other than a brief overview, but rather I think what we're doing and some of our results have inspired, I think, some interest on our part in considering the ethics of machine learning. But what are we doing? We've got a paper that's still a bit under construction, and we've been liaising with quite a well-known Manhattan-based financial institution. And we're not actually supposed to say the name of it here today, but it would be an institution everybody would know. And we've been working with the data from them to create a alert model for money laundering. And I'll get into a few more details on that in a moment. But the punchline for us was, even though we used extensive account data, transaction data, even including a proprietary algorithm from the institution itself that they've used for a long time, even when we include all those things, we find that actually the national culture variables, if you're familiar with Hofstede's research, or Hofstede's national culture dimensions, and he's one of the most cited people in the social science index, and his dimensions of a culture have been around since, I don't know, at least 40 years. Well, anyway, the punchline is that national culture alone provided a high degree of predictive power for money laundering alerts. And then when we combined it with all this other extensive data, our predictive ability went way up. And that amazed us a little bit, that just rough national measures could have such a predictive capability. What are the ethics of this, is what I'd like to explore a little bit here. Machine learning and financial economics research, I say causality. I get the impression when I read financial economics research that's more and more incorporating machine learning. I mentioned a couple papers here that even use acid pricing models and have been published in the very top journals. There's not really, to my knowledge, the emphasis on forming hypotheses, and of course testing endogeneity, reverse causality, all these other things that we value so highly. But rather there is sort of, at least up to this point, some are challenging it, sort of, if it works to make a prediction, a factor works, then that's fine. And but there are implications of that. Clearly, machine learning presents a point of departure for both business and research. Issues of profiling are also very much in the public mind, right, in the US. So this strongly adds motivation here. There's been quite a sweeping reaction, I think, has received international news to police killings of African Americans in US hands. And for of course, that's the tip of the iceberg. For decades, there's been a use of profiling based on race or demographics and all kinds of issues in the United States. For instance, there are prediction models now that predict probability of recidivism when considering paroling an inmate, and it's found race is sometimes a predictive element. And of course, these inspire a huge ethics debate and need for further investigation. In our money alert model, we were looking at data from 2009 to 18, and we have about over 200,000 alerts. Alert means flags are, raised that cause suspicion and so on. And we have a great deal of data on account age and customer age, net worth, whether IRA, trust, education, whether business or retail, and with a great deal of data on transactions, the amount, the number of recent transfers, all that. And I mentioned also we have the use of a proprietary algorithm that we're not actually able to look inside and see what's in there. And we use, of course, a lot of the standard toolkit there for machine learning and looking at areas under the curve and true positives, false positives, and of course, random forest, support vector machine, gradient boosting, and all that sort of thing. But what we again found was that national factors are surprisingly strong predictors, even amongst all of this stuff. And we feel that given the climate in the U.S. and the emphasis on profiling and all the different contexts, that there is, I think, a need for greater highlighting on ethics concerns about this and considering what would be some of the solutions to this. Because we are quite struck by and didn't anticipate the power of national factors. There's been, of course, papers in recent years that have talked about concerns about the transparency of algorithms and algorithms used for hiring, promotion, loan approvals. Of course, many of these things are life structuring, life altering for some people. And how are they established? In all kinds of contexts in our life, including even dynamic pricing models that might be not as life structuring but irritate people and so on. And then when it comes more specifically to national culture, I won't go into all these papers, but there's been at least 30 years of articles on national culture that associate cultural qualities with ethics qualities. And national culture can be used often in a lot of other ways. For instance, cultural distance is commonly looked at in international business, that when there's greater distance measures, there's less trust, there's going to be more transaction costs to vetting asymmetric information, to create a merger and acquisition or create some contract or something, of course. But there's also over 30 years at least of papers that ascribe certain values to certain cultures that are not necessarily neutral. They might be positive or negative. In finance research, papers have published in top journals that suggest individualism quality of Hofstede is associated with overconfidence, and they find financial markets in those countries have more momentum effect, more trending effect, and so on and so forth. And there's a large body of papers that look at what cultural dimensions are associated with different quality of ethical perception and behavior. And then in cultural accounting, of course, there's since 1988, Sid Gray at Sydney's seminal work, there's been association of culture with predilection for transparency, or its opposite, secrecy, and so on and so forth. We even got a little bit carried away with it some years ago. I was working with Raj Agarwal and my wife, who's a professor of education, and we kind of amalgamated some of these papers that associate national culture with different levels of ethics, and came to the conclusion that in countries where people do better on the GMAT tests are also countries that are less ethical. That caused a bit of a stir, and it was I think you could argue different aspects of that. But we find that the cultural quality of individualism is a strong predictor of money laundering alert models. And if you were to take that, of course, to the extreme, since the United States is like amongst the highest ranking countries in the cultural quality of individualism, would we say that major institutions in the U.S. should not have U.S. clients, for instance, or avoid U.S. account holders, for instance? Although the members of my team who are at the Dublin University College Dublin also remind me Ireland actually is rather high in individualism as well. There are a number of aspects that one can look at with this. For instance, are you using national culture, demographic information to deny someone a loan, or are you simply using, okay, or are you using demographic information to have a better prediction? But it becomes a gray area, right? And I would notice this too, that, you know, if you consider the amount of papers in financial economics or just business research in general that have different instruments for culture, there's plenty of papers out there that instrument culture as religion and try and get a county by county, even in the US. They look at Catholics versus Protestants and look at capital structure of firms in more Catholic areas and so on. Where could this end? Could you end up with US citizens having a greater or lesser chance of having a loan approved if they live in one county versus another, for instance? But what about a framework for evaluating ethics in machine learning? Firstly, is the entity using ML allowed to use the data? Is machine learning to be used for detection or prediction? This sounds sort of safe on the surface. If you're just detecting something, what's the harm in it versus trying to predict and deny someone parole or deny a loan and so on? But there's a lot of gray areas. For instance, in the US, people drive down the highway and go over the speed limit, almost everybody. But African Americans are seen to be pulled over more often because there's a profiling aspect there that the police might find something more. In the US, there was a highly controversial practice in the US. The IRS was providing closer scrutiny to vocal anti-tax groups to see whether their application for tax-exempt status was valid, and so on. You have microfinance. A fundamental pillar of microfinance is that women are more likely to repay than men. Or scholastic cheating. You want to predict scholastic cheating. One of the research suggests low verbal skills as a predictor. But how would that bias us against immigrant students or foreign students visiting, you know? So there's a tremendous amount of gray area that I think needs much more exploration. Is there a possibility of a transaction cost view, that there's a value to society of having good prediction models, but there's a cost to society of building simple prediction models that may use a very rough measures of national factors and demographic factors? But is there a solution? I know I'm running out of time, so I want to get to the solution. And I think the solution is obvious, that, and we need to take our own medicine with our alert model, is that when you get to the processing speed of many ML procedures, it's very high, right? The old idea that simple solutions are the best because they take a lot less resources may need to be revisited. And maybe we need to look at these algorithms that use very rough measures of demographics, race, ethnicity, national culture, and go beyond what would probably be their misspecifications that come from aggregating demographic and national factors. And maybe as a society, as a global society, maybe the extra cost of doing that is the way to go. And so I will thank you for your attention here and keep the schedule moving. I look forward to your comments and questions in the Q&A session. And let me stop.
Okay, thank you, Professor Goodell. You remind us the importance of to consider the ethic value in providing inputs to machine learning. So thank you so much, Professor Goodell, for the presentation.
Thank you.
Okay, now let's meet our third speaker. He is an academic consultant and lecturer who is interested in economic crime, anti-corruption, UK overseas territories and offshore financial centers, legal and institutional development. He is now a course director of international development, University of Cambridge, UK, and also fellow at Yale University Global Justice Program in USA. He holds his PhD from University of Cambridge. So without further ado, hi, Dr. Dominic Thomas James. The time is yours.
Thank you. Good evening to you all, Mr. Rector, Mr. Chairperson, distinguished speakers and audience members in Indonesia and, of course, around the world. It's a delight to join you this evening and share some remarks and insight on this very important topic of financial crime. And it's in austere times and concerning times, such as those we live in, we all feel perhaps maybe more detached than we otherwise would feel in terms of being able to gather at conferences and symposia. And it's critical, therefore, that those of us tasked with or interested in the regulation and disruption of financial crime are able to come together in forums like this and share our views and insights on shared and respective challenges. From the outset, I just wish to thank the organisers at the Universitas Sebelas Maret and the Audit Board of the Republic of Indonesia for the kind invitation to join you today. Ladies and gentlemen, today I wish to focus my remarks on one very important area in the field of financial crime, namely corporate ownership regulation and the increasing transparency of beneficial ownership information in respect of legal entities, in other words, companies. My research interests, as Mr. Chairperson alluded to, do focus on offshore financial centres, including British overseas territories located principally in the Caribbean region and North Atlantic, as well as those Crown dependency region, jurisdictions which have a particularly different relationship with the United Kingdom, and they're located in the Channel Islands and the Irish Sea. These are of particular relevance, these jurisdictions, particularly in recent times, given their development as international financial centres, but also reputational targeting that they have faced in recent times, and indeed how this has meant that they really are amounting to be some of the first jurisdictions in the world to commit to having open, transparent, publicly accessible registers of beneficial ownership. The Panama and Paradise Papers really shone a bright light on the world of incorporation services and indeed raised significant awareness of this topic of offshore business, perhaps an awareness that members of the general public may have had an inclination of, but not necessarily a deep understanding of hitherto. And of course, while the fallout from the data breaches coming out of jurisdictions like Panama, the Bahamas, before that the Bahamas leaks, and indeed Bermuda with the Paradise Papers, while the fallout was perhaps underwhelming in terms of enforcement, the effect of the data breaches really was to create a public register of beneficial ownership, as it were, overnight in respect of companies that were registered offshore. Since then, the transparency campaign in this regard has intensified, although perhaps surprisingly, an international standard on the storing, the gathering, and indeed the exchange of beneficial ownership information remains ill-defined and lacking. This is, of course, in many ways at odds with the broader international anti-money laundering regime, which really presupposes universalism and standardization in terms of laws, principles, and standards that countries must adopt in order to create this risk-based environment and identifying risks and regulating the threats of money laundering. A good example, of course, is the unparalleled success of the Financial Action Task Force, which is really the unparalleled and unchallenged standard bearer on anti-money laundering and counter-terrorism financing regulation. And of course, their series of recommendations and indeed guidelines, as well as the supplementary monitoring and review processes which underpin those guidelines, really have become universally really the standard bearer upon so many other regulations and standards in the field of financial crime are based. of course, it is really, isn't it, underpinned by this shared challenges, shared responses ethos. And with economic criminality, such as money laundering, knowing no borders, really is transnational in nature. It's all the more interestingly, the fourth European Union Anti-Money Laundering Directive, 2015, aligned somewhat with the FATF standard, stipulating that such information can be held in a public or a central register. Removing, however, that element of choice, the fifth EU Anti-Money Laundering Directive goes somewhat further, and it stipulates that information needs to be made available in a public register or essentially to any member of the general public. And the very wording of public right to scrutiny, which aligns, of course, with the UK approach in terms of its own public register, which has been has been formed now since 2016. The nexus between corporate anonymity and money laundering is, of course, well documented. Moreover, what is a particular concern is the reality of professionals knowingly or inadvertently enabling and facilitating the provision of financial crime through such vehicles. That, of course, ensures that criminality can continue, and that is a concerning reality. That is, of course, after all, what the ethos of the Panama and Paradise-style data dumping has really taken focus of. Since the data breaches, however, the campaign for public beneficial ownership registers has really firmly emerged. However, it's also right to note that public registers are far from globally normative, and in fact only represent, really, as far as a standard is concerned, represents countries' views within the EU, and indeed the UK, and by extension, its network of British overseas territories and Crown dependencies. Really, it's a very small number of jurisdictions in the wider picture. And some figures to demonstrate how small this actually is. As recent as 2018, only 6 G20 countries had functioning central registers, let alone publicly accessible ones. Even within the EU, appetite for a unitary approach has been rather protracted. By March 2020, only 5, including the UK, of 27 of the EU's member states had implemented freely accessible public beneficial ownership registers. By comparison, the US has only recently tabled legislation to create a central register, the prospect of a public one, at least any time soon, seeming unlikely in the context of the US. The transparency campaign really relies at its core on the notion of nothing to hide. It's this idea, in other words, of businesses which are legitimate should have no reticence or inhibition in making their information public. The flip side is that if you object, you, by default, maybe have something to hide. And the implication is that if centrally held registers and information exchange to foreign law enforcement is indeed your standard, well, that is substandard to that information being publicly available. As countries, perhaps counterintuitively, seek to implement the Financial Action Task Force recommendation on this in good faith, a significant and increasing influential lobby is really undermining that and wishing that it would go further in order to have complete openness. This is in many ways where the conflict starts to arise, not to mention, of course, the value that certain jurisdictions place on fundamental legal doctrines such as the right to confidentiality and privacy. One of the architects of the amendment to a recent piece of UK legislation called the UK Sanctions and Anti-Money Laundering Act, which the amendment of which compels UK overseas territories to make their registers of ultimate beneficial ownership public, said that the territories may well provide access to law enforcement and law and order agencies through closed registers, but that does not allow civil society, charities, NGOs, and the media to expose them to the sort of scrutiny that the Paradise and Panama Papers did. Now, of course, for those jurisdictions who've committed to creating and implementing public registers. Of course, it's clearly a positive move. This is because any jurisdiction interested in safeguarding its reputation and attracting legitimate business needs to ensure that its regulated environment is positively reviewed, first and foremost, by international money laundering monitoring bodies, but also positively perceived. Given the pressure by which public registers are being advocated by major world powers such as the EU and the UK, clear that if a jurisdiction can make the leap rather than be pushed, then of course I think it augurs well for their international reputation in the context of committing to disrupting financial crime. Particularly in the case of jurisdictions I've referred to, the UK overseas territories and crown dependencies, for example, they have been under adverse attention and spotlight in this regard for many years. And it's right to acknowledge that many of recently enacted key legislative and regulatory reforms, such as reformed anti-bribery legislation modelled on the UK's gold standard Bribery Act, national risk assessments in the areas of money laundering and terrorism financing, and of course economic substance legislation, which is in its very nature designed to subvert the problematic doctrine of form over substance, which has plagued the reputation of officers for decades. Countries' commitments to public registers should therefore be taken in line with other key and complementary areas. It should be noted, however, that the decision to go public will invariably mean different things to different people and different jurisdictions. Take a simple example. Bermuda happens to be a leading reinsurance market and a well-regulated one at that, as per the Financial Action Task Force's recent review earlier this year as to their AML regime. It's also been the subject of reputational target in recent years. However, it's recently committed to operating a public register. By contrast, the British Virgin Islands, whose market focus on corporation services is, relatively speaking, very significant in the context of their own financial market, is opposed to creating a public register. Another British overseas territory, the Pitcairn Islands, with a mere population of 50 inhabitants, it was recently reported that they have committed to a public register. Now, notwithstanding that this is the least populated jurisdiction on the planet, it's unclear at this point what the relevance of that will be. Further, however, there are unresolved issues with public registers which are worth pointing out, and that relates really to the lack of independent verification, the risks with inaccuracy or outdated information, and indeed the reliance being at the point of the owners or the agents providing that information. This latter point is particularly concerning if registers are designed to predominantly disrupt criminals who may be innately dishonest in the first place. Finally, there's the unintended consequence of a small number of jurisdictions. Thank you. There is the unintended consequence of a small number of jurisdictions, and presently virtually none outside of the EU and the UK and its extended network, of creating public registers. Unless all jurisdictions which operate sophisticated financial centres go public, as it were, then it may in fact encourage the race to the bottom for illicit finance, which will go to jurisdictions where it is darkest and where regulation on beneficial ownership and indeed other key areas is weak, and international cooperation may simply be non-existent or at least incredibly challenging. Moving forward, colleagues, two things will be interesting to monitor in this context. First, the benefits of technology to both verify information, store it, ensure its reliability and timeliness, and of course, accessibility to others, whether or not that takes the form of a central register with bilateral information exchange frameworks to competent law enforcement authorities, or indeed public registers. In times of COVID, we've seen the benefits of technology, and it's right that innovation in this space really continues in our context regarding beneficial ownership. Secondly, and perhaps more crucially, it'll be interesting to monitor the international position on beneficial ownership beyond the UK and the EU, and specifically whether going public in a small number of jurisdictions will actually serve the aim of disrupting criminality. Ladies and gentlemen, thank you for your attention. Good evening, and I wish you all the very best with the remainder of this webinar. Thank you for your attention.
Thank you, Dr. Dominic, for your presentation. Well, I'll take some notes based on what you explained. Money laundering has no border and all jurisdiction is interesting to protect. So country commitment should be in line with public interest. So thank you so much, Dr. Dominic, for your presentation. And first of all, we would like to apologize if all participants who connect with us through Universitas 11 Maret YouTube channel and Center for Fintech and Banking Instagram Live, if you have problems that the broadcasting stops, we will fix soon. So please, you can move to Zoom Cloud meetings and we will fix our connection to YouTube channel and also Instagram Live. So let's meet our next speaker. Now fly to Netherlands. She is a full professor in Department of Industrial Engineering and Business Information System at the University of Twente, of course, in Netherlands. From 2008, she works at the University of Twente as a full professor of social safety study, and from 2013 as professor of cybersecurity and business continuity. She holds her PhD from Leiden University. Her research interests now are information security, cybercrime science, and crime science. So without further ado, I would like to introduce you Professor Marianne Junger.
Hello.
The time is yours.
Yes, I will share my screen in. Right? Does this work?
Yes.
Okay, good. Well, thank you, Mr. Moderator. Good afternoon, everyone. I'm really happy to participate to this webinar and to talk to so many people in Indonesia and also to some international colleagues. So my study will be about businesses as victims of specific crimes. In relation to fraud, a lot of scholars have proposed cultural explanations, and they propose that offenders, fraudsters, share some values conducive to fraud. In my study, the data suggest a much more rational and opportunistic explanation of fraudulent behavior. And my data suggests that by studying victims, one can also learn a lot about offenders or fraudsters. Let me start with some statistics. It has been mentioned before that in many countries, at least certainly for total crime in the Western countries, crime has been decreasing since the beginning of this century. And in contrast, fraud has been increasing a lot, and this is data from the Netherlands, but I think it's also exemplary for data in the UK, in the US, and in many European countries, certainly. And I do think that in Indonesia, there's also an issue with fraud in e-commerce. So I think the increase in fraud is an international problem. I would like to explain and describe my study on fraud against businesses. It's data from the Fraud Help Desk in the Netherlands that collects information from businesses on fraud and fraud attempts. And I'm focusing on 3 types of fraud: ghost invoices, fraudulent contracts, and CEO fraud, which is also called whaling or business email compromise. And I would like to note, and I will illustrate later, that there is a gradual increase in effort on the part of the fraudsters, from going from ghost invoice to the fraudulent contract to the CEO fraud. So what are you doing when you send a ghost invoice? You copy some sort of an invoice that you collect from somewhere, and you spoof it, and you send it to businesses, and you just wait for these businesses to pay your invoice. If you are deciding to go for a fraudulent contract, and I apologize, but this email is in Dutch, but the explanations are in English, and I will mention that this is, you have several steps. The fraudster needs to usually contact a business by telephone and proposes some deals, and then to finalize, he sends a contract by email or by ordinary post, and he mentions that there was a discussion, and he asks someone from the business to sign, to put their name, their function, a date, and to sign, and then to send it back to him. And then basically, even if he's defrauded, the business signed a contract that in court could be considered to be legal, even if it's very unclear if there's any service that's being provided. And then the most modern way to defraud a business is using CO fraud, or the business email compromise. And that, if you start doing this as a fraudster, you need to do some research about business, and you need to check, who might be the CEO, who might be the financial person, what department, what sort of business they're involved in, or commerce. And then you start sending emails, and these emails have a number of characteristics that it's impossible for the CEO to meet in person or on the telephone, that this business transaction needs to be done very quickly, and that, of course, he cannot be reached other than by email, because if there would be a phone contact, that would probably disclose the identity of the fraudster or the fact that there's a fraud going on. So what we've been doing in this research is see to what extent characteristics of the business and of the fraud are related to the type of fraud that we are studying. And in terms of opportunities or routine activity theory, routine activity focuses a lot on business characteristics and on opportunities for fraud. So we looked at the market orientation or the service orientation of the business. To what extent are they really focusing on the public? They might be more vulnerable to fraud. We looked at the location of the business, at the season at which the fraud was taking place, and we looked at business size. We didn't see any relationship between the service orientation or the industry sector in which the business was functioning or the location. That didn't matter for the type of fraud, but we did find very strong relationship between seasonality and business size in relation to the type of fraud. And this first table that I would like to show, and it says that basically fraudsters are able to adapt to season. And CO fraud, as you can see here, is mostly happening in summertime. We expect that this is the case because, everybody is on a holiday during summer in the Netherlands and many countries. And so you could expect the CEO to be absent as well. So this would be the period for fraudsters to try to commit CO fraud. Then on the other side, ghost invoices are usually conducted in spring. And we expect that this is the case because businesses in the Netherlands probably close the fiscal year and have to send reports during this period and are probably, paying a lot of bills that they should have been paid probably earlier on. And probably the fraudster expects that, while being in the process of catching up and paying all these old bills, the people from the financial department will not notice these fraudulent invoices in between. Another interesting thing is that fraudsters are very attentive to the size of the business to which they address their fraud. As you can see here, CO fraud is focusing really a lot on the very large businesses that are just a very small part of all the businesses in the Netherlands. So large businesses are really overrepresented in CEO fraud. On the other hand, the fraudulent contracts and the ghost invoices are directed mostly at the self-employed or the very small businesses. So basically, fraudsters are picky and they know what type of fraud to direct to what sort of company. Another aspect is looking at the aspects of the rational choice model of crime. And this says that basically offenders generally, but also fraudsters, make a rough calculation of the costs and the benefits of their actions. And in this study, we propose that the type of fraud would be an indication of the effort that a fraudster is making, because the CEO fraud needs more effort than the contract fraud, and the contract fraud needs more effort than just the ghost invoices. And distance is also an aspect. We didn't know precisely where the fraudster would be, but we could assess where the bank account was located. So distance could also be an indication of the effort, with a bigger distance as an indication of, an offender putting more effort in the fraud. And of course, the benefits are usually just the requested money. So let's look at the first table. And here you can see that there is a very strong relationship between the type of fraud and the requested amount of money. For CEO fraud, offenders ask huge amounts of money. And the biggest amount of money in our data was 400,000 euros. And I think perhaps some of the people remember that there was a big CEO fraud case of the Pathé cinemas, where offenders basically defrauded Pathé cinemas from 19 million euros that was paid in 3 parts to a bank account in Dubai. The fraudulent contracts, they request less money, and the ghost invoices, actually, fraudsters ask a very modest amount of money. So here, this suggests strongly that the more effort you put into the fraud, the higher the requested amount of money you're going to. And something similar is seen here. I have here the amount of money that are requested, and this is the location of the banks. And you see that when a bank account is located in the Netherlands, the amount of money requested are much less than when, for example, at the other side of the world, the bank accounts are located in Asia, and then every amount requested is higher than 10,000 euros. So again, more effort is linked to higher. Sorry? Okay. Yes, I'm almost done. Well, the interesting thing is that most of these cases were actually attempted frauds, and 9% of the businesses actually paid. And the likelihood of paying was actually equal for every business and every type of fraud. The only thing that seemed to decrease slightly the likelihood that the business would pay the fraudulent amount of money, that was when it was summertime, and probably that's basically that there's less activity anyway in summertime, so then that you are less defrauded as well as a business. We also asked or checked what was the sort of preventive measures that seem to help and to avoid paying. And that basically was also always related to a smart employee that noticed that something was wrong. So the amount of money was absurd, the email was unusual, there were similar previous emails, the fraudster didn't know the business rules, someone called the CEO for confirmation, and that sort of thing that were out of the ordinary helped to prevent the fraud. And I wanted to make note of two aspects here. That is that also from previous research, we think that a business that has employees that are employed for a longer period of years, that is a situation where that will help to prevent fraud. And that is suggested here as well, that an employee that sees that there's similar previous emails, or that the fraudster doesn't know the business rules, that sort of thing is something that would be easier for an employee who is in the business, works for the business for a longer period of time. And the opposite is true, that if you are a business and you have lots of change in your personnel and people don't work there for a long time, then that would be increase the vulnerability to fraud. So as a summary, we found that opportunity factors are important for the likelihood of the type of fraud, and that fraudsters basically can accommodate to business size and business routines. And also that offenders make this code cost-benefit analysis. I think this also shows that in research, if you're looking for the prevention or for analysis, that it is very important to be crime-specific, and that we find these big differences actually between the different types of fraud and the different type of victims and business routines. So to end, I would like to emphasize that I think there's a lot more research that is necessary, how to better protect victims, what sort of information would help, what are the money flows, what is the role of money mules in this process, and also would more automation help, for instance, in blocking bank accounts of fraudsters. I have some references for those who are interested. You can send me an email if you cannot access them. And of course, I will be available for questions. Thank you very much.
Thank you, Professor Junger, for your presentation. Some notes that's been the highlight from your presentation is the increasing fraud is now the international problems, and it is now committed online. He also explained the 3 types of crime. Those are ghost invoice, fraudulent contracts, and also the CEO fraud. And her research shows that fraudsters can adapt with business characteristics of companies, such as company size and season. So season is very interesting because since fraudsters deal with the season, so for all participants, you can give the questions to Professor Junger about this. So thank you so much, Professor Junger, for your presentation. Now from Netherlands, we fly to Australia. We will meet our 5th. He is an associate professor at the University of Sydney Business School. His research focuses on the consequences of anti-financial crime regulation on business model, and business risk. He has worked as a consultant to the United Nations, the OECD-based Financial Action Task Force, the Asia-Pacific Group of Money Laundering, and the Australian Financial Service Council. His PhD was completed from Cambridge University. So, hi, Dr. Taufiq Chaikin.
Thank you very much. I'd like to thank the University of Indonesia and the Audit Board of Indonesia for organizing this unique international webinar. And when I was thinking about what I should be writing or talking about, what immediately hit me was the role of technology. And so I've entitled my talk, I'm not sure whether they can put up the slides for me, Big Data and Financial Crime Responses. And let me just say a few words about technology. technology has a credible potential to assist in the detection, investigation, and prosecution of financial crime. And we've heard today a discussion about the potential of digital forensics, the role, potential ways that businesses can protect itself. This is particularly the case in what I call, this is the golden age of big data. Everything these days is recorded in a digital format, our own personal lives, our government dealings, as well as the whole corporate world. And this is permanent. And this provides, as I said, great opportunities in terms of dealing with financial crime. But we must remember that technology can and has been and continues to be used by criminals, and indeed it tends to be used by criminals in a more efficient way because it's clearly in their own interest. Technology is used both to avoid detection, but also to hide the proceeds of fraud. Technology can be subverted by criminals. And even in the case of digital forensics, which is something I wrote about 13 years ago, the role of network evidence and its limits. But even something like digital forensics can be corrupted. And ultimately, whatever technology can do, we rely on the human dimension, what we call human intelligence, how humans. And if we look at the greatest success story in terms of the fighting financial crime, and I think that we see that in the United States, their success has largely depended, in the most important cases, on sting and undercover operations, which essentially involves a penetration of organised crime groups by humans, and technology assists, but technology is only one part of the answer. If we go to the next slide, I want to say something about secrecy, because secrecy has been presented as the greatest obstacle in the detection and recovery of illicit assets. And Switzerland has earned that reputation of being a major deposit point for illicit money. A country with less than 9 million people, they have a third of the private wealth assets of the world. Now, this was achieved by Switzerland by what I call their bank secrecy model, in terms of not just secrecy in terms of banking, corporate secrecy. You heard from Dr. Dominic about beneficial ownership and professional secrecy. Their model was essentially copied by over 80 offshore financial centers. But it was not just the law that was important. Anybody can create a law. It's what the Swiss banks spent hundreds of millions of dollars of essentially creating cybersecurity practices to protect their financial data of their clients. There has been a three-level system of access and password security. There's very sophisticated surveillance and audit systems, and bank managers were trained. All the cybersecurity practices were designed to protect the secrets. The reason I know a little bit about that is I had a client when I was in private practice, and he was accused by the Swiss government of engaging in economic espionage on behalf of the Philippine government when they were seeking to trace and recover the assets of the deposed dictator of the Philippines, Ferdinand Marcos. And despite all those security measures, there was a vulnerability. If we go to the next slide. Thank you. Can we go next? Yes. Sorry, before I come to that, I put this table up here just to show you some of the cases where corruption money has been frozen in Swiss banks. The case I was involved was Marcos. And although you see the figure $356 million frozen, which grew up to $657 million, because contrary to what said, they do pay interest on frozen money in Switzerland, that only represented about 5% of the amount of money that was actually stolen. So most cases, in terms of, even though these are presented successful, in terms of freezing of money, and these all involve mainly developing countries, as you can see from that list, largely it's only a tip in the ocean. Now, given there's an Indonesia audience, question you might want to ask is, why is there no Indonesian money frozen in Swiss banks? But that's another question for another day. If we go to the next slide, what's happened in Switzerland is essentially their financial secrecy model has been destroyed because of various vulnerabilities. And the first, I'm just going to mention one. Cybersecurity in Swiss banks in the late 1980s was outsourced to third parties. And the consequence of that was that there was a new vulnerability because these third parties could be corrupted, and they were. And as a consequence of that, there was a whole series of vulnerabilities in the whole Swiss banking system. And you can see these other factors that have played into the undermining of the offshore financial secrecy model. If we go to the next slide, in 2009, this really broke Swiss bank secrecy. UBS, which was the biggest wealth manager in Switzerland, was compelled not only to pay a $780 million fine for aiding US taxpayers in a $20 billion tax evasion scam, but were also forced to disclose the identity of their clients. Now, that was really the death knell of Swiss banking as far as the United States was concerned. Interestingly, Birkenfeld, who was a wealth manager at UBS, he became a whistleblower who was critical to the actual case itself. And under the US system, unlike most other countries, it's possible for you to recover, as a whistleblower, and be rewarded for disclosures. And in fact, Bradley Birkenfeld received $104 million for assisting the US government to recover the assets. And actually, although he received $104 million, he's suing the US government because he says he didn't receive enough. They didn't pay him enough money. Now, the effect of this case was essentially to eliminate offshore financial secrecy as far as the United States was concerned. The United States introduced the Foreign Tax Compliance Act, and that was for their own benefit. But if somebody asks me, is Swiss bank secrecy working? Well, it still works for developing, looting of developing countries. If we go to the next slide. As I said, we live in a world of big data. Now, what I've listed there is a series of cases where there's been massive leakage or theft of financial information from major offshore financial centers. We have Liechtenstein, Cayman Islands, Singapore, we have Luxembourg. Okay, Switzerland, Panama, and so forth. If we just go to the next one, please. Next slide. Thank you. And these can be both, a number of them have been anonymous. We just go to the next one if we can. Next slide. Just to give you the amount of information that's being disclosed. This is all secret information. 4 terabytes of data. Panama, Paradise, all these cases are revealing huge amounts of information, which is then being examined, by governments, by journalists, in a way to assist in the investigation of financial crime. If you just go to the next slide, thank you. And just to tie this up in terms of, how it's actually being used. If you get from that data, let's say you find out that David Chaikin is a secret owner of a company. You didn't know about that. And the Australians say, he owns that company. And then we go to the next slide. And then, because in Australia, just like Indonesia, we collect information. The banks and financial institutions are required to report every international fund transfer in and out of that jurisdiction. You put those two facts together. David Chaikin is a secret beneficial owner of a company we never knew about. And we find in one of those international fund transfers the name of that company. You immediately have an investigatory trial which can lead to the investigation, I'm using myself as an example, for tax evasion and so forth. It's finding out, the key thing in international is finding out things you are not supposed to find out about, the secret information. And if you can use that data with publicly available data, or today we have access to all this social media data, with big data, you will find connections and find new investigative leads which will allow you to find things that you're never supposed to discover. And we just go to the next slide. Thank you. Because written proposals are critical to the detection of financial crime. If you look at that slide, you can see that whistleblowers actually were responsible for 42% for detection of corporate fraud. We just go to the final slide. There are a number, just the next slide, thank you. There's a number of public policy issues. I won't have time to go through all those, but these are critical issues that will have to be looked at in terms of conflicting stakeholders. The conflict between the right of privacy and law enforcement need for maximum information to combat serious financial crime. How do we regulate the vast growth in data information? How do we regulate technology which can be used for good purposes and bad purposes? And this growing threat of state-sponsored cyber intrusions into private and public data information sources. How are individual states going to respond to that? And how does that fit into this whole question of international financial crime and cooperation? So, and the last slide, if you want to look at a few references, some of the things that I'm talking about in today's lecture, you could find there. We must remember that international financial crime, money laundering, is the art of deception. Individuals can be deceived, machines can be deceived, and the clever criminals who are essentially in an arms race with governments will utilize all sorts of illegal and dirty methods where, on the other hand, in democracies, we must play by the rule of law in the games, so we are at a disadvantage. But at the end of the day, we fight commercial crime, but we must ensure that in fighting it, we still retain the important values of our systems of government and values of our population. Thank you very much.
Thank you so much, Dr. Chaikin, for your presentation. I'll take several notes that you mentioned about the whistleblower paradigm. For one side, whistleblower is critical, right, to detect the financial crime. You say that your study shows that 40% of corporate fraud is detected by the tips of whistleblower. But when the person shares information for purposes of making it publicly known, that would be a different case, the leaker. So thank you so much, Dr. Taufiq, for your presentation. Okay, so before we move to our next speaker, I would like to inform you, this is the good news, that you can now access our university YouTube channel, Universitas 11 Maret, and also the Instagram of Center for Fintech and Banking, Universitas 11 Maret, to join with us. We are really sorry for the technical problem. And now you can access and join this webinar through YouTube channel of Universitas 11 Maret and also using Instagram Live. So now I will call the sixth speaker of this international webinar. He is an associate professor and also director of Research Management Center, INCEIF Malaysia. His area of specialization is applied microeconomics with strong interest in economics of crime, natural disaster, and military expenditure. He graduated with a PhD in economics from University Putra, Malaysia. So please welcome Dr. Baharom Abdul Hamid.
Thank you very much, Yoshio. Assalamualaikum. Very good evening. It's been an honor to participate in this, and I would like to congratulate University 11 Maret for organizing this and bringing a lot of experts into here. I'll be tackling it from a slightly different angle. We have seen all the learned professors, all the researchers have been looking at it from mostly the micro level, the firm level, and we have looked from the forensic accounting and all those. But I would like to take a slight twist. I would like to take a look at from the macro level, and I do understand about the limited time that given to all the speakers. We would like to accommodate as much as possible subject matter expert to talk on this international webinar. So I would consider my task, if I could convince, if I could relay my message, the importance of what we call a financial crime risk assessment. In order for us to do a financial crime risk management, in order for us to manage financial crime, we need to assess the risk. While the developed countries, and there are some of the countries in Asia Pacific which has taken positive steps, which have set up a national level council and have issued a national level crime risk assessment. And this is crucial because we have to understand that these financial crimes are predicate to money laundering and terrorist financing. And it is not a single agency's job or task that could tackle it, but rather a combination of many agencies under the umbrella. For example, I'm working currently in the context of Malaysia, whereby we have what we call a National Crime Center, NCC, and we are working together with 16 agencies, the anti-bribery, the domestic trade, the police, the central bank, and others, the income tax department, and so on. So if we look at it, you know, because the issue of this financial crime, because it threatens the safety and the soundness of the global financial systems. And above that, the crimes threaten the security and safety of the nation. It's quite wide-ranging. These crimes range from a fairly simple operations, like what we have seen some of the professors presenting earlier, to highly sophisticated terrorism. And financial crime is different from the normal crimes. In normal crimes, you come face to face with the criminals. You know where the criminals are, what that they are doing. But in this financial crime, it's cross-border. Sometimes the criminal or the perpetrator could be thousands of miles away or the other side of the globe. So let me just go through a very simple presentation here. Like I said, what I would like to instill is I would like to instill the importance of having a financial crime risk assessment. And this is not something new. Like I said, World Bank have issued 2 different versions of templates to assess the crime. And bear in mind, this financial crime is very country specific. So I will just go through a brief, what are the financial crime, who are the people behind this financial crime, the types of financial crime, and why it is important for us to understand so that we could tackle it before it becomes a predicate to money laundering or terrorist financing. So in a nutshell, we could segregate this financial crime into what we call 2 essentially different, but it is closely related types of conduct, I would say. Firstly, these are the activities that normally we say that dishonestly generate wealth for those engaged in the conduct in questions, like Prof. David have explained earlier. For example, the exploitation of insider information or the acquisition of another person's property by deceit, which should invariably be done with the intention of securing a material benefit. Alternatively, a person may engage in deceit to secure material benefit for another. However, the other side of it, the second part of it, this is what we call, these are also financial crimes that do not involve the dishonestly taking of benefit, but that protect the benefit that have already been obtained, or to facilitate the taking of such benefit. An example of such conduct is where someone attempts to launder criminal proceeds of another offense in order to place the proceeds beyond the reach of the law. I'm pretty sure most of the people who are on this webinar are very much well aware of why Malaysia being infamous for one of the biggest, if not the biggest, money laundering case, which is now a classic case study, which is known as the 1MDB. So the elements of vulnerability, the elements of threat, and these are what I would like to bring into the picture here, and how we can nip the, okay, thank you, and how we can nip it in the bud before it gets worse. So who commits this crime, this financial crime? So basically the people who are behind this financial crime are what we call, like, it could be organized criminals, it could be corrupt heads of state, business leaders, employees, and like what have been shared earlier, from outside the company, has also been shared earlier. And increasingly the external fraudster is colluding with an employee to achieve bigger and better results more easily. And finally, the successful individual criminal, serial or opportunist fraudster in possession of these proceeds are a further group of people who committed financial crime. So what are the main types of this financial crime that we're talking here? These are the examples of mainly what are the financial crimes that is that's looked at cross-country analysis: fraud, electronic crime, money laundering, terrorist financing, bribery and corruption, market abuse and insider dealing, and information security. And some of these are sometimes not standalone, it is interrelated. For example, bribery and corruption can lead to money laundering, fraud can lead to money laundering, and this can lead to terrorist financing. so forth and so forth. So how is this terrorist financing is related, or how we say that this financial crime are predicate to terrorist financing? So if you look at closely, the factors that promote terrorist activities, of course, is the ability of the terrorist organization to obtain financial support, as well as to maintain strong financial infrastructure. So if you look carefully, it is claimed that terrorist organization, where do they secure the fund from? How do they get the fund from? It could be legitimate sources. It could be abuse of charities or legitimate businesses, which is used to camouflage. Self-financing through their ardent members or supporters. Criminal activities, state sponsors, and activities in failed states and other safe haven. So if you look at the World Bank's template, like I said, either you look at the first generation or the second generation, there are the two important components there: vulnerability, threat. And if you look closely, the vulnerability of both money laundering and terrorist financing is the same. So where is the difference? The difference is in the threat analysis. So if you look at the vulnerability analysis, like I said, if you look at the classic case of 1MDB, how vulnerable it is, how fragile it is, when you have the head of the country also heading the other agencies. So this shows how vulnerable. This is what we call the legal, the judicial, and the institutional framework. Same as go as the economic and geographical environment, whether the country is landlocked, whether the country has a border that is vulnerable, as well as the financial institutions. If you look, like I said earlier, the difference between money laundering and terrorist financing risk assessment templates is the threat analysis. So what is needed here is the linkage between the agencies to share the data. The data that is collected needs to be shared among the different agencies so that you could easily link it and you could map it where the money is originated from and where the money is flowing to. And I totally agree when one of the professors was sharing earlier his study on the cultural background of these perpetrators, or we call it the offenders. Yes, it plays a big role. It's not trying to stereotype. It's not trying to be playing along the racist kind, but there is a certain shift, or we call a certain weightage to a certain origin and so on. So if you look carefully, this is how the whole matrix works in. So once you have identified the overall vulnerability and the overall threat, whether it is low, it is medium low, high, and then you could focus your energy, you could focus the crime fighting, or you could focus the risk management according to the crime, according to the agencies, and according to the types of crimes or types of the people who originate. And it's what we call a continuous effort. So, number one, what is important here? Data, the information that is collected across these agencies, across different enforcement agencies. All this information then are parked under a central agency, what we call, a national level committee. And this information or data are then evaluated, analyzed, and the results of this analysis is then reported back to the respective agencies for them to review and their actions to be taken. And again, the cycle will continue. It's a continuous cycle. It is not a journey that starts and stops. So it's a continuous cycle with new information, with new data, and with new developments. And if you look at the national level committee, you see, if you cannot be just looking at the financial crime angle alone. So you need to look at the severe crime. You need to look at the tax evasion. We need to take a good look at the shadow economy. We need to look at the illegal immigration, because not only theoretically, but empirically, these are what we say is closely related. the level of financial crime, fraud, and cybersecurity. So this national level committee, like what I have said earlier, collect the data from all the respective agencies. Among the countries that which are actively promoting this are such as Hong Kong, Australia, New Zealand, which I would say, apart from the other developed countries. It's still very alien to other countries like Malaysia and Indonesia. So the formation of the national level committee is what I call to start the ball rolling. So you need to have a national level committee that looks at the macro level, which has representatives from all the relevant agencies that are keeping the data. For example, like I said, the taxation department, the Royal Customs and Excise Department, the police department, immigration department, and others. And all these agencies will collect and share the data to the national level committee. And again, like I said, this data will be analyzed and then identify the threat and the vulnerability. Once you have collected and collated the data and you do a simple analysis, you would at least find what we call a trending analysis. And you could find what are the prevailing types of crime, what are the prevailing offenders, who they originate from which part of the world, what is their background, and so on. So this identification of the threat then reclassified as is it low, is it high, is it medium, and so on. Then what is the threat? So you look at the two different angles. One is the vulnerability and the other is the threat. Vulnerability is basically looking at the fragility and how exposed and what is the probability of it happening. Threat on the other side is what is the risk? Is it high risk? What is the threat to the country, and so on. Analyzing the data is only half the job. The dissemination of the analysis to the departments, that is the important part. So the dissemination, and so that these departments would understand and they would have to take the proactive agency. And of course, once we have done this, the policy response, which would have to be done with collaboration with the national level committee. Like I said, I know the time because of the time, but what my main intention today is to introduce the importance of what I call financial crime risk assessment. Because if you could do the financial crime risk assessment properly, and definitely the financial crime risk management could be done. You can't manage without identifying or assessing the risk. And you cannot identify the risk if every department or agencies work in silo. So to start the ball rolling, every single country, every single nation should have a national level committee which collate, which analyze, which disseminate. I would be more than happy if I have triggered some of this, and in case there are other opportunities for me to share the analysis that I have done, the research that I have done based on this, I am more than happy. I hope to see you in the future, and I'm always available with my email in case any of the participants or the fellow speakers needs to have any further information or further data or further things. I'm more than available. Again, I would like to congratulate University 11 Maret for organizing this and bringing together all these subject matter experts. It's an eye-opener, like I said, even for me, myself, because I'm more involved on the macro level data, but today I've listened to the other experts, and it gives me a different perspective. Thank you very much, Yoshio. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam, Dr. Baharom. Yeah, thank you for reminding us the importance of the assessment of financial crime risk. And it is also interesting about your question, how is financial crime linked to the terrorist financing? I believe it can stimulate many questions from the participants regarding to the questions. So thank you so much, Dr. Baharom. Now, let's meet our seventh speaker. He is Indonesian. So we go back to Indonesia. He is an auditor from the Audit Board of the Republic of Indonesia. His education was completed from Universitas 11 Maret, Melbourne University, Australia, and his PhD was completed from Loughborough University in United Kingdom with specialization area in accounting. So without further ado, I will say hi, hello, Pak Iqbal.
Hi, Mas Yosi. Thank you very much.
The time is yours, Pak Iqbal.
Thank you very much. Good evening. Assalamualaikum warahmatullahi wabarakatuh. Good evening, Dr. Agung Firman Sampurna, CSFA, the BPK RI Chairman, Professor Dr. Jamal Wiwoho, the 11 Maret University Director, all distinguished panelists from all over the world, and distinguished participants, especially those of my colleagues from the Supreme Audit Board of Republic of Indonesia, who still make your time until now. Thank you very much for your time and attention. All right, this evening we have discussed a lot what is financial crime, fraud, and cybersecurity, how significant the damage caused by it to the economy, and some of possible solutions for these issues so far, including a very comprehensive presentation from Dr. Agung Firman Sampurna, CSFA, regarding cybersecurity and digital forensic. In this session, I will present another perspective on dealing with this situation. So, according to some studies and surveys, we find out that audits and whistleblowing systems may reduce fraud, other financial crimes, and cybersecurity attacks. It can also mitigate the impact and increase organization response to the risk. So let's move on to the first slide, the background. On many occasions, the revelation of fraud, other financial crimes, and cyber attack cases begins not from a complex auditing procedures, not either from a complicated wiretap technique of law enforcement officials like the Anti-Corruption Commission in Indonesia, but very often it starts from a leak of an insider who may be involved but feels guilty about his or her mistakes, or maybe those who has merely witnessed the cases without being able to prevent it. Obviously, by combining technology and human capabilities, it will double the effectiveness of fraud detection system in our organization. So the idea behind the insider approach is that the organization members are the people who know very well the organization business process. They can see the unethical behavior directly in their daily working activity with less effort and cost. We usually incur significant amount of money and manpower in order to reveal this scandal when the organization hires external monitoring system. All right, let's move on to the next slide. Here, I would like to emphasize the definition of whistleblowing system, just in case we never heard about this before. So what is whistleblowing system? The whistleblowing system is the disclosure by organization members, either former or current, of illegal, immoral, or illegitimate practices under the control of their employers to persons or organizations that may be able to effect action. Here, the key point that we need to report the wrongdoing to the person who may be able to handle or to fix or to make improvement to the situation. Another definition from other scholars like Job in 1909 who defined whistleblowing as a deliberate, non-obligatory act of disclosure which gets onto public record is made by a person who has privileged access to data or information of an organization about non-trivial illegality or other wrongdoing, whether actual, suspected, or anticipated, which implicates and is under the control of that organization to an external entity having potential to rectify the wrongdoing. And here the next slide we already here, the whistleblowing system as anti-fraud and enhancement of cybersecurity system. So let's see from the data and information about the whistleblowing system itself. First of all, in the US, since it was first introduced, this program has succeeded to recover a significant amount of state loss from corporate fraud. In a period of 11 years, from 1986 to 1997, according to Roca and Kleiner in 2005 study, the US government recovered more than 1.8 billion in 225 cases. And the whistleblower itself involved nearly collected 200 million USD. This is quite huge money compared to the total amount of the case itself. And also some of us may have heard the story about Cynthia Cooper and Sharon Watkins. They were the person behind the disclosure of the WorldCom and Enron scandal. And also Jeffrey Wigan, whistleblower in the tobacco industry. He himself testified before the court that eventually led to the tobacco industry 146 billion litigation settlement. And again, this is quite huge of money that the government can recover from one industry itself. And next is from Indonesia. We have Vincentius Amin Sutanto, Agus Condro, Bambang Sukoco, and Susno Duaji as well-known figures for their actions in exposing fraud and other financial crimes cases. When we talk about cybersecurity, we might also need to consider the following story. This is not a true story, actually, but it might be relevant for some of us. Your company's security controls are lacking, and a high-level employee in IT is naturally worried. He is addressed his concern a number of times. That he said that employees are regularly transmitting unencrypted information, sharing password, and using non-compliant cloud services to share data and sensitive client-side IP. This doesn't seem, unfortunately, this doesn't seem overly alarming for the senior management. They said that we have all made similar mistakes, so the comments fall on deaf ears and operations continue like usual. A few months later, however, the employee becomes increasingly vocal. Or senior management decides to let him go. Is the problem solved now, or the problem might just be beginning? So in situation like this, whistleblowing system become more relevant for cybersecurity enhancement. And then the initial detection of financial crime and fraud. The biennial surveys from the ACFA consistently put whistleblowing tip-offs as the most common method to detect fraudulent acts. In the 2020 surveys, the current or latest survey, ACFA mentioned that as in previous years, tip-offs or whistleblowers were in the top position, around 43% of respondents following the whistleblowing system, the initial detection system for occupational fraud, followed by fraud investigation team and internal audit by 14% and 12% respectively, while external audits account for about 1% only. Let's move on to the next slide that we're gonna discuss about issues in the whistleblowing system. Apart from the notable effect of whistleblowing systems in detecting fraud, other financial crimes, and cybersecurity, critical scholars elaborate some negative opinions on whistleblowers. For example, on many occasions, whistleblowers report only trivial or just daily gossip or complaints based on their misleading judgment in the situation. Arbitrary whistleblower might also take advantage of the circumstances by reporting baseless allegations using anonymous features and confidential channels in response to some perceived harm or wrongdoing by another party, such as a supervisor or other employees, just because this employee doesn't like them. This is very alarming. Just be careful if you want to implement whistleblower system in your organization. And also, disruptive employee often misuse the whistleblower protection status to avoid dismissal or disciplinary procedures. We will look more widely and deeply at these issues. So the first one is who can blow the whistle, and the second one, who should be responsible for handling the report, and then the third one, what channels should be provided. So for the next slide, we talk about who can blow the whistle. So is it only for insiders and relevant parties, or should be widely accessible to members of the public? If we choose to open the policy to members of the public, Brown, according to the study from Brown in 2006, this has two possible shortcomings. The first one is information provided by external individuals might not be as important as information from insider. And then the second one, these whistleblowers may not face the same risks and difficulties compared to insiders who often experience harassment, victimization, demotion, suspension, and prosecution from their colleagues and institutions. However, another perspective views this issue differently. If legislation and internal organization policies prohibit potential whistleblowing from ordinary citizens, there is a possibility of losing significant information from them, as in many cases, these people hold accurate information regarding fraud and other financial crimes from their interactions with the organization members who deliver services. So the second issue is who should be responsible for handling the report. The discourse about who will receive and deal with the report is interesting and relevant to the current discussion, considering that this factor can determine the success of the anti-fraud program. Captain 2002 argued that a clear structure and procedures for reporting incidents should exist to put in place a sound reporting system. Thus, the potential whistleblower will have a complete picture in mind about who will receive, assess, investigate, and take follow-up action on the report. In turn, it will encourage and increase employee confidence to blow the whistle. The notion of specifying whistleblowing channels and recipients to ensure the success of whistleblowing program is supported by a wide variety of literature. For example, SEFE 2020 lists top 3 parties whistleblowers reported to. They are direct supervisor, fraud investigation team, and internal audit, accounted for 28%, 14%, and 12% respectively. So let's move on to the next slide. What channels should be provided? An organization can establish a whistleblowing system in a wide variety of ways. Thank you. SEFE classified 5 different formal reporting mechanisms, i.e. telephone hotline, email, web-based, mail letter, and fax. Besides those 5 channels, SEFE also mentioned direct reporting channels, such as reporting directly in a personal meeting with supervisor, company executive, or a fraud investigation team. The discussion of whistleblowing channels raises other important questions to discuss, whether the report must be submitted in written or oral form, in person, or through indirect channels such as telephone, email, or web-based application. Direct reporting facilitates a two-way communication where the complainant and the recipient may confirm and dig deeper into the information further without hesitation and time delay. However, it may be risky for the complainant since his or her identity can easily be exposed to third parties or the person being reported, hence increase the likelihood of retaliation. By contrast, indirect reporting system via email, hotline, or web-based application guarantee more confidentiality and also facilitate anonymous reporting. Prior studies show that employees and members of the public are more courageous to report if confidential and anonymous reporting exists. The absence of such a system may discourage people from reporting the wrongdoing. And then let's move on to the next slide, key success factors to implement whistleblowing system in our organization. Here we highlight 3 different key success factors. They are strong commitment from high-level management. This is really important to give the guarantee, to give like a reliability to trust to the members of organization that the system is guaranteed by the high-level management. And then the second one is massive dissemination program. And then the last one is proof of actual cases. Thank you very much for your attention. That's all my presentation, and yeah, see you again. Assalamualaikum warahmatullahi wabarakatuh.
Whistleblowing system as anti-fraud and enhancement of cybersecurity systems. Yeah. So he stressed on the commitments, massive dissemination, and proof actual cases are needed to do that. And the issue will be who can blow the whistle and who will handle the report and what channels provided to blow the whistle. So thank you so much, Dr. Iqbal, for your presentation. So I would like to say hi to our eighth speaker. He is Dr. Richard Alexander. He finally joined with us now. So let me introduce himself. He is a lecturer in financial law at School of Finance and Management and School of Law, SOAS, University of London. He is also a financial law program director at Center for Financial and Management Studies, as well as academic teaching and research. Dr. Richard is also active in professional training, as has to date been involved in programs in jurisdiction, including in South Africa, Nigeria, Sudan, China, and Italy. So, hello, Dr. Richard Alexander. We finally meet you.
Yes. Hi, Yoshua. Hi, Yoshia. Thank you for your patience. It's a great pleasure to be here, and my great thanks to Universitas 11 Maret for this kind invitation. This is the first time that as you kindly said, I've participated in a number of programs in a number of jurisdictions. This is the first time for me in Indonesia, but I very much hope it will not be the last. So time is pressing, so let us press on. And hopefully this will share. And if not, I will call on. If not, I will call on your colleagues. But hopefully this will share. I'd like to talk about impersonation of line managers as a particular type of email frauds. We're all familiar with the use of email now to commit fraud. As we'll see, this particular one does not just make use of email, but makes use of information, and as we'll see, even photographs, harvested from the websites of universities, including my own. So, how does it work? Now, hopefully we move. So the basic fraud. This is common in universities in both the United Kingdom and in the United States. A colleague of mine who was Dean of Students at Cal Western Law School in California in the United States, she said, yes, they'd had this as well. Yes, please do. Yeah, by all means, take control of my screen. Thanks. Anyway, so the basic fraud is that the fraudster emails a member of staff, might be impersonating the head of department, in our case, or it might be the dean. It persuades the colleague to buy a large value of transferable assets. A popular one in the UK is iTunes cards, and email them to you. And email them to the fraudster. They say, we'll reimburse you the next day. Of course, the next day, the genuine head of department said, can we go back one slide, please? Just go back to the previous one. The next day, the genuine head of department said, that wasn't me. I never asked you to buy these. The fraud has now been discovered, but by now, the assets have already been sent. So next slide, and we'll look at how it actually works. So, step one, the fraudster identifies the current head of department. And as we'll see, fraudsters now keep up to date on this. They will go into the university website. I won't say they hack into it because, as we'll see, this information is usually publicly available, often for marketing purposes, also for communication with colleagues. So we identify the current head of department. Now, let's suppose that I am the head. Let's suppose that I am the head of the School of Finance and Management Studies. We see his name is Dr. Richard Alexander. So they'll then create an email address with the same name. So, for example, I'm using my own name, but this is a pattern taken from impersonations that I've seen at my own university. Dr. Richard Alexander at gmail.com. But not yet. But there's a risk that maybe the recipient, maybe maybe the colleague will say, hang on, hold on a second. That's not his email. That's not his normal email address. That's not the work email address. There's something strange here. So a sophisticated fraudster, to make it look more convincing, will take the photo. We'll take the photo, my photo, from my web page on the university website, and include it in the sender ID of the email. So when it appears, up comes from Richard Alexander, or from Dr. Richard Alexander, with my photo on it. So let's say Yoshio or David Chaikin. As soon as they open the email, they see my face there. Oh, it's him. And it also, because they focus in on my picture, this distracts their attention from the actual email address of the sender. They may not even notice that this is actually drrichardalexander@gmail.com, not my normal SOAS email address. Next slide. Then they email the colleagues in the department. These are the victims of the fraud. Next slide. And it's a gentle lead up. Many of us are familiar with the previous type of email fraud. That many of us may have got this. My wallet and passport have been stolen, and I'm stuck in. If it's sent to a European or an American, they might say I'm stuck in Jakarta. If it was sent to someone at Sebelas Maret, they might say I'm stuck in Rio de Janeiro or in Vancouver or wherever. My wallet's been stolen with all my credit cards and my passport as well. Could you please wire me some money so that I can get my passport back? That is very blatant. That's old school. Yes, in my time I've received a number of those. I'm sure several of you have as well. But this fraud is much more subtle. Starts off with a semi-casual opening. Are you in the office? Or when you have a moment, could you email me? And certainly in the culture of many UK universities and American universities, this is credible. This is the sort of thing that a genuine head of department might do. Okay, it's not something he wants to have a word with me. It's not a full email setting up policy, but are you in the office? If so, could you drop by? So are you in the office, or when you have a moment, could you email me? Okay. As I say, this is the kind of message that we're used to getting. Next slide. And the email looks credible. That's the sort of email I'm used to receiving. It carries the name of my line manager. And possibly, as I said, often, not always, but sometimes it will have the photo as well. And therefore, from the victim's point of view, it's easy not to notice that the email is different. And even if you do, you might say, oh, they've emailed me from their private email address. Okay, not ask too many questions. And as I say, it's very common to get this kind of email from a head of department who knows that I might be teaching right now, I might be in a meeting, I might be giving a seminar. So, okay, I don't need to speak to you immediately, but when you're free, could you please get in touch? So the colleague emails back, I'm in the seminar right now, but I'll be back in the office at 4:30, or just back in the office after teaching, or I'm available now. Do you want to talk? Next slide. And the victim is now hooked. The conversation has started, and many of us are aware, the psychologists tell us this. Once we've started a conversation, once there's been an interaction, once emails have gone back and forth, psychologically we are now inclined to continue. We're much less likely after a few emails have gone back and forth to question whether the sender is genuine. The moment at which I might have said, is this actually my head of department emailing me? That's when the first email approaches. Now, we've been back and forth. Are you in the office right now? No, I'll be back. I'll be back in half an hour. Okay, back now from teaching. I'm now hooked. I'm now psychologically conditioned to believe. So, okay, next slide, please. Okay, keep going. Next slide. Next slide. Next slide. Next slide. So now they strike. Could you please help? I've completely forgotten to get my nephew a birthday present, and I'm stuck in a meeting. Hey, we've all been there. Could you go to the store and buy £300 worth of iTunes cards and scan the barcode and scan the barcode. Yeah. I'm sorry. 3 minutes left. Okay. I'll scan and email you the barcodes. I'll reimburse you when I see you tomorrow morning. Okay. It seems a bit high, but it's an unusual request. But I've now been drawn in a bit, and so I'm more amenable to believe the story. And what's more, it's coming from your line manager, so you're more likely to do as you're asked. I know one of my colleagues was a victim. This arrived right at the time that he was making a promotion application. He needs his head of department on site. Next slide. Next slide, please. Next slide. So just in case the fraudster then follows up with further emails, have you been able to get them? Because they know that for many of us, work emails go straight through to our smartphones. I might be out at the shop, but ping. So, hey, I need this. It keeps up the sense of urgency. Next slide. Next slide. Hello, next slide. Oh, really? That's the. Okay. In that case, I'll stop this and I'll try to share my own slides. Then, if I can come out of here, if you can give me control back. Okay. So here we go. Right. Vulnerabilities. Now the fraud makes use not just of the email, but also the information on the university website. The department or faculty website will often give the name of the current head department or the dean. I was impressed when I was researching this to see Sebelas Maret does not do this. Many UK, US, Australian universities do this, and give the names and addresses of the name and email addresses of the colleagues. Everything that the crook needs, they can get in a few clicks. And the website will also have features of the colleagues which can be photoshopped into the user ID. So how do we present it? The biggest preventive measure is awareness. A policy that staff should always report any email scam to IT, don't just delete it. And then certify notification throughout the university, informing colleagues of the details of the latest fraud. But you can do more. The names and contact details of colleagues, for all sorts of professional reasons, we need to have those publicly available. But keep the details of who the line managers are to the intranet. So you need to know the name of a colleague. You don't need to know his head of department. And have a university policy that colleagues will only contact each other using their work email address. They won't use private email address. But this relies obviously on the victim noticing the address of the sender. For short messages, are you in the office? Have you got a moment? Don't use email, use WhatsApp or text or other messages. That way, if, as my current line manager does that, he uses WhatsApp for quick messages, it makes an opening email, are you in the office, look more unusual. Thank you very much. Any questions?
Thank you, Dr. Richard, for the presentation. Dr. Richard raised the other types of fraud that use email to impersonate the manager or the leader. And yeah, well noted, Dr. Richard, biggest preventive measure is awareness. Thank you so much. So we go to the last speaker for this plenary session. So now we are flying to Solo to meet our last speakers in this plenary session. He is from Universitas 11 Maret, specifically from Accounting Department, Faculty of Economics and Business, Universitas 11 Maret. He holds his PhD in Accounting and Finance from University of Twente, Netherlands. His last research to complete his PhD talks about corporate political connections. So, without further ado, Pak Taufiq Arifin.
Yes, all right. Yeah, thank you, Yoshia, for the time. Glad to be here to discuss and talk about the recent issue of financial security. More specifically, I'm going to talk about the cyber threat of financial firms, and we can learn a few cases how firms deal with it. So you might know that the potential increasing of efficiency, reducing costs, and also improving access to and delivery of financial services makes fintech's businesses so attractive. Those financial services mostly come together with the technology and include, but are not limited to, like peer-to-peer lendings, and also online payment, foreign exchange services, digital wallets, e-money, big data, and so on. These features make financial services for customer become faster and then more convenient and also cheaper. Next to a various positive aspect evolving through the growth of financial businesses, new risks and challenges are emerging as well. According to the IBM report, the fintech is under attack. In 2019, for 4 years running, financial firms saw the highest volume of cybersecurity incident over any other industry, more than retail, more than transportation, more than media, and also more than professional services. What I want to highlight for financial institution is that there is a major impact for financial security breaches that other industry don't necessarily have. You may notice that the financial industry breach is typically costing 142%, which is more than other industries. But the most critical number that's up on this slide for me is that when banks is having a security breach, we know that there is a total cost of security breach. And well, what I want to focus on is that in every breach, what we typically see is that bank on firms is losing around 6.1% of the overall customer base. So if you think about it, that just impact not just in the exit increase, but that does to your total financial impact over the long term. So what's more is that the threat landscape is widening. Cyber attack on financial firms are increasingly sophisticated and diverse. We have seen a website-based attack known as a distributed denial of service. So usually hacker fool customer facing bank website with the traffic and take them offline. We have seen also attack on the SWIFT-based money transfer systems. Attack like this have made headlines since at least 2016, when the attackers stole around $81 million from the Central Bank of Bangladesh. And also, maybe 2 years ago, we saw the first ATM malware as a service attack for sale in the dark web. As the previous speaker said, that the dark web is the lower layer of the internet. So it is largely inaccessible to you and also for me, that you need the special tools to get into there, and then also a lot of criminals hang out there, and about 40% of the data on the dark web is related to the financial fraud and also leaked data. We have seen also recently the customer data of Tokopedia is for sale in the dark web. So as you may know that the Tokopedia is one of the largest marketplace in Indonesia. So simply put, this is war. So the John McFarlane, from Chairman of Berkeley, said that our traditional defenses are no longer adequate, and this is need the wartime, not peacetime. So urgency. So then what's next? We can learn from few cases. So organizations are responding by shifting from passive cyber defense to more active cyber defense strategies. So what does this mean? The passive strategy is largely reactive, whereas active strategy involves going outside your network and directly engaging with the hackers or the people who try to cause you harm. And we're also looking at the fact that the financial firms are embracing the white hat hackers to battle test their systems. So we have seen maybe like bounty hunter. We have seen companies like PayPal and some Indonesian firms such as Gojek. They do this as well. So, but largely they are following in the footsteps of U.S. Department of Defense, which rolled out a program called the Hack the Pentagon. It is where they say like, okay, hackers, we are going to open up our system and then come and penetrate us and show us what you did, so we can go back and remediate this attacks. And also, we're also seeing bank invest in deception-based security tools that trap hackers. So for example, yes? Okay. So for example, if you are in certain companies and you have within your network the crown jewels, your customer data, and you know it is to be protected, and you know hackers are also going for it. So why not to clone the data and make it something that is innocuous and cannot be used to harm anyone, but it looks like the crown jewels, they are important to you. So when the hackers goes into the system and steals that, it is actually a tracking device. When they leave your system, it takes you all the way back to the lab. So we also actually seeing financial firms look into military intelligence agencies for these different type of active cyber defense strategies. For example, we have seen some firms launch cyber war rooms to coordinate threat intelligence and also response, such as MasterCard, Visa, and also Citigroup, and also the Wells Fargo. And so what's next for securing fintechs? Well, a game-changing fintech security and cyber regulation are on the horizon. So first off, the consumer maybe become active defenders, or more specifically, we're going to see firms that champion proactive security put this kind of tools in the hand of consumers. So we already seen innovations such as polymorphic credit cards. This is essentially a credit card when you can link up to 8 different payment methods. It has a small keyboard on it and also screen. It creates a one-time use PIN that significantly reduces card theft and also chance of fraud. So we also seeing things like researchers at the University of Iowa creating synthetic materials that could be placed inside of credit card, such that when the card is stolen, the user can send a signal to the card and rendering it totally unusable. So I think this is the short presentation. Thank you for the time. Enjoy the future and stay healthy. Thank you, Yosia.
Thank you, Dr. Taufiq, for your insights. Yeah, so all panelists has presented their insights and their knowledge to all participants. So we have arrived in the Q&A session. For your information, we received so many questions to all panelists, but because we have the limited time, so our committee has selected several questions and it addressed to every panelist. So I will read it one by one, okay? Okay, for the first questions, let me search first. Yes. Okay, for the first question is addressed to Professor Stuart Madnick. Hi, Prof. Madnick.
Hi.
Okay. The question comes from Rudy from Telkom. He asked, is there any way to get and uncover the evidences which is hiding in an international public cloud or someone who using fake ID in social media?
I'm not sure I heard the question, but I did hear the mention of a public cloud.
Yes, and the way to uncover the evidence, to get the evidence.
Well, there's 2 points I want to mention. One, so we didn't mention it much in this talk. More and more organizations are moving to the cloud, which is a lot of technical advantages. But unfortunately, the cloud is also a new technology, and there's been a number of attacks made because people are not using the cloud correctly. So that's just a side issue people should be aware of when they go to the cloud. Regarding identifying people, obviously there are lots of approaches that can be used. In fact, often, as mentioned by other speakers, whistleblowers or insiders who know what's going on can often help you. But one of the things that a really good hacker will do will be not only cover their tracks, but also leave clues to somebody else. So, for example, a group of Russian hackers broke into an Iranian hacker site and did their hacks from there in the hope that the Iranians will be blamed for it. So there is, in general, no guaranteed way to track the hackers. But obviously there are ways you can try, and we have succeeded on occasions.
Thank you, Professor Madnick, for the answer. I hope we can answer your question, Mr. Rudy. So we move to the second question, which is addressed to Professor Goodell from Irfan Mangkunegara. He is from the Audit Board of the Republic of Indonesia. He said, it is interesting that you mentioned the national culture variable by Hofstede in building your algorithm to detect money laundering. As you mentioned, there are a lot of literature regarding culture and corruption. Yes. Which national culture variable do you use in your algorithm to detect money laundering?
We tried all of the basic Hofstede ones: individualism, uncertainty avoidance, power distance, the so-called masculinity. And many of them had some significances. And we also controlled for cultural distance, which is a very different thing that just simply suggests that there might be cultural distance between the sender and the receiver. But the strongest result was for individualism. And we did not, at this time, we don't distinguish between receiver and the one sending the wire. But we simply use either one in the results. Individualism has been shown to be associated with sort of recklessness and less concern about getting caught in a lot of social psychology studies.
Okay. Thank you, Professor Goodell, for the answer. Now we move to the next questions to Dr. Dominic. It came from Wahyudi Fajrin from the Audit Board of the Republic of Indonesia. He asked, what types of non-cash transactions are generally used by government around the world that are considered as the safest?
Well, I think the reality of that question is that it would, of course, depend on which government you're looking at, and indeed which type of economics that really runs throughout that particular government's ideology. We're seeing a lot of difference of opinion at the moment with various types of non-cash transactions, and of course how that relates to the regulation of financial crime. It's certainly quite clear that, at least from my research, in respect of many UK overseas territories government, they're really opening their minds to the realities of different types of currency, what that could mean for their economies, and perhaps more importantly, to think about it in a broader sense, what it means for various responses of different types of employees, different types of workers coming from jurisdictions all over the world to try and set up in these jurisdictions that are offering far more emphasis on different types of non-cash industry. So really, I think I can't give a single answer as to which one is preferred by governments. It really depends which government you're really looking at.
Okay, thank you, Dr. Dominic, for the answer. I hope we can answer your question, Mr. Wahyudi Fajrin from the Audit Board of the Republic of Indonesia. And there is one question which is addressed to the Chairman of the Audit Board of the Republic of Indonesia, Dr. Agung Firman Sampurna, but he has left this meeting. So I will read the questions and also the answer from Dr. Agung Firman Sampurna. The question is, Indonesia ranked 85 in Corruption Perception Index. Indonesia faces now in organization maturity combating corruption. The challenge for Indonesia is to reduce the number of corruption. So what is the role of the Audit Board of the Republic of Indonesia to answer the challenge? Otherwise, a lot of corruption actors in Indonesia challenge the authority of the Audit Board. So I will read the answer from Dr. Agung. He said, we do not deny that fraudulent acts are still present, but at present, by strengthening the investigate or forensic unit to respond the escalation of financial crimes that result in the state losses, we strive to continuously improve the governance system. Strengthening the system in question is building an effective internal control system. We continue to complement our institutional tools, like forensic laboratories, the use of the latest information technology with reliable applications, and routinely enhance the competencies of our auditor. In short, if anyone challenges our authority, just bring it on. So I would like to say that we need to build governance and culture that fosters accountability. But at the same time, the effort must be linked to its benefit, which is in this case is economic development. So for anyone who submit these questions, just contact our committee so we can send the full answer from Dr. Agung Firman in answering your questions. So thank you. So moving to the next question is the question which is addressed to Dr. Chaikin, Dr. David Chaikin. The question comes from Daniar from Tech Lawyer Jakarta. What most appropriate regulation and practices for government in anticipating, readdressing, and recovering from cyber financial crime? Australia imposes extradition for offenders, and now Indonesia government start to look strategy from Australia approach. Then what are the challenges faced by Australian authority? Dr. David? Hello, Dr. David?
Yes, I think the question essentially is looking at what more can be done to facilitate the identification, tracing, and recovery of assets. corruption assets. The great challenge is not just for Australia, but for every jurisdiction. In your own country, the police and law enforcement agencies have a vast range of powers that can be used to collect evidence, freeze assets, and so forth. Once the money leaves your territory, once the evidence, if the evidence of the crime is outside your country, you have no power. And this applies to everybody. And in order to deal with that, you need to cooperate with other countries. And let me say that cooperation is much better now than it was 30, 40 years ago. Indonesia has really only started along that path, and much more needs to be done in Indonesia, just like in Australia. It took Australia many, many years to build up their system of cooperation with other countries. However, at the same time, we are subject to geopolitical factors. We're all aware at the moment that the extradition treaties that Australia, Canada, United States have with Hong Kong have essentially been suspended. Now that may seem very, very odd, but what I'm trying to say to you is that everything you do outside your jurisdiction, particularly in relation to recovering large amounts of money, requires very close relationships with the other country, not just at the law enforcement level, but also at the political level. And I know, for example, Indonesia and Singapore, there's always this issue about the extradition treaty, whether it should be a treaty or not. But these are things that take a long, long time, and they're very, very fragile. And so what I would encourage Indonesia to do, just like we've done in Australia, and we've still got great problems and challenges, is you need more to work on those areas. And it's not just agreements between police agencies through Interpol or mutual assistance arrangements. The other possibility is getting and using civil cooperation in order to recover the proceeds of crime. So if you've got to look at many, many different aspects in order to deal with this huge challenge. But when I started 30 years ago, there was hardly any cooperation. So we've moved so far, but we need to move even further, and particularly in the area of cybercrime, because to catch cybercrime, you essentially need real time investigations in order to investigate cybercrime.
Okay, so thank you, Dr. Chaikin, for the answer. The next question is addressed to Professor Junger. Hi, Professor Junger. Okay, so the question is come from Marianne Berliana from the Audit Board of the Republic of Indonesia. She asks, is there any characteristic of the fraudster that related to the specific type of the fraud? Ghost invoice, fraudulent contract, and CEO fraud. Can you unmute your voice first, Professor Junger?
Yes.
Okay.
Didn't see that. Is this about characteristics of fraudster? Is that right?
Yeah, for the related to the specific type of the fraud, like ghost invoice, fraudulent contract, and CEO fraud.
Yeah, I think the problem is, well, he didn't look at this in the study. We didn't have any information on the fraudster. Also, generally, I think it's not a lot of research certainly not quantitative research about fraudsters. So I couldn't say a lot about that in relation to the study that I did. Yeah, I mean, I think it depends a bit on the situation, the context of the fraud, and the type of fraud. And generally, they're probably younger than you might see, because it's not the case that they're all very, very smart and in high positions in the organization. So they're probably less different from ordinary criminals than you might think. But yeah, what we also know, I think, is that some of these crimes that seem quite serious, like the DDoS attack. You know, we did one study and we saw that many of the DDoS attacks attack educational organizations, institutions in the Netherlands, and that these attacks are connected with, well, the routines of the school, and in all probability, also when we interviewed a few offenders online, you know, often it is either to do something fancy or it is to avoid tests that these attacks are being conducted. So, yeah, in this case, it's DDoS attacks, you know, directed at education institutions, and usually it's probably students who commit them for their own, you know, reason, and to some extent related, you know, to their own problems, which is to avoid attack. Yeah, that is what we did in terms of research. And I think that, you know, what you would need to do if you want to know more about the fraudsters themselves is to see the category by category, you know, in what context do they work or live, and what are their specific characteristics. That's all I can say.
I may add a brief comment that quite often these things are also nation-state actors or organized crime. So it's a wide variety of kinds of actors.
Yes, of course. Right. Absolutely. Yes. Certainly. That's a...
Okay. Do you have a comment, Professor Madnick? Do you want to add the answer?
Well, no, absolutely.
No, I was just mentioning there is an image that the hacker is a single individual, and although that's still often the case, more and more often it's some form of organized crime, which may be independent or in some cases actually affiliated with certain governments. So it is a much larger enterprise than many people realize.
Certainly. I certainly agree with that. It's just a very, very broad category of people.
Okay, thank you, Professor Junger, for the answer. So the next question is addressed to Dr. Baharom. Someone asked how to assess the risk of financial crime, money laundering, and terrorist financing for state-owned enterprises.
Thank you, Yosha. Like I said, when we say that to analyze the risk, the vulnerability, and the threat, so for the state-owned agency, or in Malaysia we call it the government-linked companies, it's still the same. That means it's the only difference is from a macro level you go to the micro level. So for these GLCs, it's still within those departments of that procurement and finance department and others. And avoiding the mistakes that have been done by the 1MDB, like I said, the case study, whereby the head of the government was the head of the GLC. And this causes a lot of non-transparency and a lot of stumbling blocks and so on. to ensure within a GLC, it has to be ensured that the appointment of certain people to a certain responsibility in the procurement, in the finance and others are thought after and careful consideration are given before appointing these people, and there should always be an element of check and balance. And creating what we call an integrity unit, which is slightly different from an audit, internal audit. An integrity unit will also help us in identifying and tackling the threat at a much earlier level. So appointment of key personnel in GLCs will have to be independent from the political appointment, and it has to have an element of check and balance.
Thank you, Dr. Baharom, for your answer. The next question is addressed to Dr. Richard Alexander. Hi, Dr. Richard. Agus Purnomo asked, how do we keep the officials' data at universities published on the website, while on the other hand, there's a need to be transparency regarding their identities?
It's a difficult balance, particularly as we know the fraudsters keep up to date. So the impersonation fraud that I was talking about has been used to impersonate 3 successive heads of department of my own department. So how do you do it? My suggestion would be that you have, as publicly available for transparency, you have details of colleagues, so their names, their research interests, what they teach, and so on. However, I would suggest that you keep within a separate system, what I've called an intranet, an internal system that is available to colleagues within the university, but not outside, who holds what line management responsibilities. So, for example, and I'll take one from the past. So, for example, you could see that Professor Lawrence Harris is Professor of Macroeconomics, and the world sees that, but only within the university do we see that he is head of the School of Finance and Management. As I say, because of the issue that I've talked about, I'm not going to reveal the name of the current one, but I think that's the best way we can strike the balance. And I think we can also, this is why I was emphasizing other measures. So for the short messages, are you around? Are you in the office right now? If the genuine line managers don't use emails for that, but use WhatsApp, use other messaging systems, using contact details that are available for the line manager to their staff, but not to the wider world, that will make the gentle lead up that the fraudsters use a lot more difficult. I don't think there is an ideal solution. This is why it's used. Why so many universities have been targeted. I have to say, the reason that I chose this topic to talk about was when 3 successive heads of department were impersonated. So clearly the fraudsters were aware when X leaves office and Y replaces him. And so I think that information, who holds positions like head of department, dean, and so on, should be kept within the university.
So thank you, Dr. Richard, for your answer. And 2 questions left. One question is addressed to Pak Taufiq Arifin. Someone asked, how do we prevent data theft from e-wallet accounts like OVO, Dana, and etc.?
Okay, thank you, Yoshia, for the questions. So I think, in my opinion, so usually firms or fintech specifically they should follow the standard of security system like COVID and so on. But the most important, I think, is the awareness of the customer. So the user, when they use the fintech services, they have to aware that there is a threat and also risk. So in this case, I think the user should be follow the security standard, like for example, they should use like two-step verification. So they have to use the verified mobile number, because usually, recently the fintech firms, they put the security to the user. So in that case, we can see from the previous case, that many cases that when their money is stolen, they give the two-step verification code to the fraudster. So they didn't realize it. So in this case, it is important for the user to be aware that there is a threat. So in that case, they should be understand that to carefully manage their security use. So I think this is very important. That's it, Joseph. Thank you.
Thank you, Dr. Taufiq, for the answer. And the last question is addressed to Iqbal. Mr. Agus Purnomo asked how to increase employee or people awareness to report any fraud that occurs in the organization.
Yeah, thank you very much, Joshua, for the question. I think, as I said before on the slide, we need to make sure that our whistleblowing system that put on the organization cover at least 3 key important things. That first of all, we need support from the high level management, because this can increase trust from the people, from the public, from the organization member as well. When they trust to our system, when they trust that their report will be follow up, and then we take care it seriously, and then we didn't ignore the report, then they will have more intention to make report. And then the other important things that we need to consider as well is we need to disseminate, we need to spread out the system, the policy to our organization member. If we have branch office the Supreme Audit Board, we have 34 branch office. We need to communicate, we need to disseminate this policy to at least the majority of our branch office, so it will reach many people, many organization member, and then they understand what is the system itself, and then what will happen to their report, and then they also believe in the system itself, that we will protecting them, their identity and so forth. And then the last thing is we need to make sure as well that we communicate the proof of actual cases. If we can uncover something significant, then we need to spread out this good news to the organization member and to the public as well. So everybody knows that we again take the report seriously. We didn't ignore them, and then everybody know about this. I think that's the important thing to do to increase and to enhance the public awareness, and then the public attention as well to report. Thank you very much, Josia, for the time.
Thank you, Dr. Iqbal, for the answer. And the questions from participants to Dr. Iqbal has ended the Q&A session. Because we have the limited time, so we have to end this Q&A session. And it has been a great discussions where we have 9 invited speakers in this plenary session. I would like to say thank you so much for your participation, especially for all invited speakers. Thank you for sharing your knowledge and insight to all of us here in this international webinar. And I would like to say thank you also to all participants who has joined this international webinar since the beginning until the end of this webinar. And I would like to say thank you also to Universitas 11 Maret and especially to the Audit Board of the Republic of Indonesia, who has made all things possible, who makes all this webinar possible to be done. So thank you so much for the support. And for all participants, do not forget to fill the attendance list in the link that the committee has shared, so we can. It will help us to distribute the e-certificate and also the materials. And also we need your feedback, so you can put your feedback in the link that the committee has shared. And before we close this international webinar, I would like to invite all participants and all invited speakers to turn on the video. We will do the virtual photo session since it is conducted through Zoom cloud meetings and YouTube and Instagram. So we do the virtual photo session. You can say hi.
Hi.
Thank you so much for your participation. Okay. Yeah, I think that's enough. Okay, so thank you so much for all invited speakers, for all participants, to Universitas 11 Maret and Audit Board of the Republic of Indonesia for joining this webinar. Thank you so much. Hope you guys have a nice day. And we apologize if there is something wrong with the international webinar, so we need your feedback for our evaluation. So don't forget to subscribe our university YouTube channel, Universitas 11 Maret, and also the Instagram of Center for Fintech and Banking, Universitas 11 Maret, for knowing the next event. So thank you so much. Hope you enjoy the day, and goodbye.
Right.